This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live. That's video on YouTube. So head over to youtube.com and search Bloomberg Podcast or Bloomberg Live Radio. That's where you'll find us. Tom Keene is out today. Somebody gave Tom the day off. I don't know who that is. It had to come from the absolute top, but not to worry because Alix Steel sitting in for Tom for the next 3 hours. Then you get a time off in the middle of the day to go take care of Alix time. Then you come back for 2 hours of TV at the end of the day, right?
Yeah, and by Alix time, you mean like meetings, lunches,
yes.
calls, prep calls? Yes,
okay.
We have that.
Very good. All right, we got a lot going on here today. We had a big move up in the markets yesterday. A little bit mixed here today. Today we're going to start off the day strong. Laura Rame, Chief Economist at FS Investments, she's going to join us in just a moment to give us her thoughts about what this Fed is going to do and what this economy looks like and where to put money to work. Jonathan Maxwell, CEO and co-founder of Sustainable Development Capital. Where do you put money to work there in the sustainable business? Gene Goldman, CIO at Cetera, on asset allocation opportunities after the Fed rate cuts. We got a lot coming up in this hour and over the next 3 hours on Bloomberg Surveillance. Let's kick it all off with Lisa Mateo. She's here. She's not mailing in. She's here. Lisa Mateo, what do you have for us?
On a Friday, yeah. So he's got futures mix, and this is after the S&P 500 notched its 39th record in 2024, extended this year's surge to about 20%. So let's start with the S&P futures. Down about 0.2%, 15 points. We have Dow futures little change, up about 13 points. NASDAQ futures down about 0.4% or 86 points. The two-year yield, 3.59%. That's up 1 basis point. The yield on the 10-year, 3.73%, and that's up about 1 basis point. To currencies, we have the dollar stronger. Japanese yen down 1% at 144.27 against the dollar. Euro weaker. British pound stronger, and that's after UK retail sales for August beat estimates. And shares of FedEx taking a hit, down more than 13%. Quarterly profit miss, softer 2025 outlook. Customers are just opting for cheaper shipping options. And taking a look at shares of its rival UPS, they're down more than 2%. On the flip side, you have Nike shares up 6%. The company ousted its CEO, brought in longtime executive Elliott Hill out of retirement to replace John Donahoe. Shares of rivals Adidas down more than 2% in Germany. Puma down more than 4% in Germany. And today, yes, the day, Apple's new iPhone 16 lineup hit stores.
Boom.
Almost
so do you get yours, Paul?
countries.
No, I have my pre-order in.
Oh, okay.
But
so you have
I'm heading over to the motherland tonight, to Ireland.
Okay.
So when I come back from, I'll see if I can
nice.
pick it up there.
Got it. Okay.
See?
Okay, it all comes full
good.
circle. Sorry,
All
I
full
interrupted
circle.
you.
No,
So-
that's awesome. But yeah, it's coming without the AI software, so you're gonna have to deal with that for a
Well,
little
I don't
bit.
know. I wouldn't know
I don't
AI.
know
I think
if
he's
would
fine
use
with
it.
that.
I don't think
I'm
he would
okay
use
with
it,
that.
but we're good. There you go, guys.
All right, Lisa Mateo, thank you so much. We appreciate that. Yes, I got the pre-order, and I'm assuming it's kind of be waiting for me when I get back in a week.
I think that's a good assumption.
I don't know.
Have a little vacay, come back, you can set up your phone. So you're gonna be like a new man next Monday when you come
the
in.
flip phone. John Tucker still has the flip phone, but at least I'm going from the iPhone 11 to the 16
That's gonna
Pro.
blow your mind.
I know.
Yeah.
It's going to be big. So Anurag Rana, Bloomberg Intelligence, he's our senior technology analyst, but basically his job is to be my personal iPhone
Which
shopper
makes sense.
for me.
Which makes
Yeah.
sense. And
So-
Paul got it in the really cool color
Black. Exactly. How about that?
God.
But who cares about
you
the
can't
color?
tell
Because
if
you
you
have
put
to
a
buy a
case on.
case.
Yeah.
You have to buy a case.
Yeah, but then you
And
do what I do. You buy a clear case so you
Oh,
can see the
geez.
super cool, nice lavender color
You
that
know
I
the
have.
the little hook on the back?
I have the little poppy guy, so I can like hold it. Okay, because my hand is not as big as yours, so like when
right.
I'm walking around, I got to hold it or else I'm dropping it all the time.
Very good. All right, you learned so much here. All right, let's get down to it, folks. We got the Fed cutting rates. That's a good thing. Presumably the economy's in a decent place here. Let's check in with Laura Rame. She's the chief economist at FS Investments. Laura, thanks so much for joining us here. What did you make of the Federal Reserve's move to cut interest rates by 50 basis points?
You know, I had been in the camp that was expecting a 25 basis point cut, but was very clear that this is one of the biggest toss-ups in terms of outcomes we've seen really since I can remember. So high uncertainty coming into the meeting. And listen, I think they did it the right way, which is to be very specific about why they did it, what they're focused on. At the end of the day, they have now completely shifted the focus to the labor market. You almost could hear them dismiss the strong growth numbers that just continue to really surprise to the upside. Growth for GDP is going to be almost 3% in the third quarter. So that's a really strong growth outlook. It's the backward revisions to the labor market. It's the concern that they should have gone last month on the labor market alone, and it was a catch-up move. I think they did a good job trying to temper expectations of you're going to get a 50 every single move from now. This is our new pace. I think they were saying that they're in no hurry to really push rates aggressively and that it's still going to be highly data dependent.
So from the way you're talking, it makes me think that do you think it was a mistake? I mean, to go 50, do you feel like this is going to reaccelerate some growth and inflation down the road?
I don't. I think that, sort of it was time to move. And, I almost like the fact that instead of saying, oh, baby steps, they should have gone 50 at the start of the tightening cycle, but they only went 25. When it's time to move, it's time to move. And you don't really get any benefit from slow policy unless you're more towards the end of the rate cycle. So I think 50 was the right move. I think they should have messaged it more clearly so there wasn't such a toss-up going into markets. And it leaves the idea that the market's kind of in control, pushing things. Not a place where I'm comfortable. I'd rather have, the policy wonks in control. But when we look ahead, I think the idea that uncertainty around the size and the speed of Fed rate moves is not going away after this week. The fact is that for 15 years, inflation was really low. All the Fed had to do was focus on their full employment mandate. That was all they had to do. And then when inflation was raging, all they had to do was focus on the inflation mandate. Today, they're in a trickier spot. They still have to focus on both. And it's going to mean a lot of heightened bond market uncertainty, Fed funds futures uncertainty, and it's going to have us all sort of distracted by this policy, a fog ahead of each meeting. And I think that is going to have sort of this, it's going to be one of the things that stops the market from just being able to take the good news of the Fed and rip higher, even though they've been doing that so far today.
Laura, how do you think the Fed views this U.S. labor market here? 4.2, 4.3% unemployment rate here. What's the Fed's view of the labor market, do you think?
It seems like their view is neutral. We, went from a super overcharged, overheated economy to neutral. And we did it fast. I think the last round of data revisions that really show sort of the labor market deteriorating since March of this year, I think caught them really off guard and was the last piece that maybe could have argued for some kind of rate move in July. But here's where we are. And I think to them, the catch up is pretty easy. They can just front load a little bit more rate cuts. But they know more than anybody that the labor market changes and is very, very volatile. So we've had some, underlying strange moves with immigration numbers, things like that, month to month. We had a hurricane that shut down a big swath of production. So we've had, some one-off factors that I think they'd like to see settle. They made fairly clear if the unemployment rate rises a lot more, the rate, speed, and trajectory changes quick. That is not my expectation. I think they're going to manage it. I think they're going to do the soft landing.
So does that mean that companies are going to stop hiring but not fire? Is that the sweet spot, staying around 100,000 jobs added each month kind of thing?
That is the sweet spot.
Okay.
And it implies two things. It implies less churn, right? It implies a longer time that people stay unemployed. And it also implies that as we move, that we're probably not going to get as much wage pressure as we did because workers kind of stick to a job and are content. Now, there's a big difference between, the layoff announcements that we get that are, of course, very troubling. But it's important to remember that those don't hit the sort of weekly initial jobless claims or even the monthly numbers in a one-to-one connection. it really takes time for layoff announcements to translate into, the organizational changes that they're going to make for it to show up in the labor market. So they're not good headlines, but all of it does add up to employees who think, maybe I should be happier where I am instead of trying to look for another job. And that churn is going to slow.
So, Laura, just 30 seconds left. What's the consumer doing out there? How do you feel about the U.S. consumer?
The consumer seems to be on solid ground. We got another retail sales number. It wasn't a blowout, but it's certainly healthy. I think we are paying close attention to the two-speed economy, and rate cuts will really help that lower income cohort, which has been really, I think, hit the hardest by record high credit card rates, record, some punitive auto loan costs. That area, I think, will get some temporary relief, but really probably we need more rate cuts, and we'll see that by the end of the year to get that more right-sized with what the higher cohort households are spending.
Right.
But regardless, households seem to be out there and spending, huge part of the economic growth.
All right, Laura, thank you so much. Laura Raim, Chief Economist, FS Investments. Appreciate getting some of your time this morning with our news in New York City. Here's Michael Barr.
Thank you very much, Paul. Alex, Lisa, it's being called a political smear campaign. That response from the North Carolina Republican Party after allegations against their candidate for governor. CNN reports Mark Robinson made inflammatory comments about slavery and other controversial topics on the message board of a porn website years ago. Robinson denies making the comments and says he's staying in the race.
I'm not going to get into the minutia of how somebody manufactured these salacious tabloid lies.
According to the CNN report, Robinson made the comments between 2008 and 2012. Former President Trump says he's a greater friend of Israel than his presidential opponent.
Let's talk about Israel, or Israel, as they say.
Trump spoke at the Israeli-American Council's National Conference in Washington, D.C. last night. Vice President Kamala Harris participated in a live stream from Michigan with former talk show host Oprah Winfrey. Harris was asked about the transition from running mate to becoming the Democratic presidential nominee.
We each have those moments in our lives where it's time to step up.
The event was dubbed Unite for America. We're learning more about deadly explosions in Lebanon this week with pagers and walkie-talkies blowing up at the same time. Reports, including from ABC, say that Israel created shell companies to manufacture and eventually sell the pagers to Hezbollah, planting explosives in the devices with remote trigger. Israel, in the last 24 hours, has ramped up airstrikes targeting Hezbollah sites in southern Lebanon. Finally, European Commission President Ursula von der Leyen announced plans for a loan of up to the equivalent of $39.1 billion, backed by the profits from immobilized Russian central bank assets, to help provide more predictable financial support to Ukraine. Von der Leyen reviewed the figure after meeting with Ukrainian President Zelensky in Kyiv today. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Paul, Lisa.
All right, Michael Barr, thank you so much. Good stuff there. Alex, what'd you make of that market move yesterday? That was, we had nothing on, when we had the rate cut, the afternoon trading was kind of subdued. Then yesterday, the market just ripped.
Two feelings on it.
Okay.
That it's options expiration today. You have over
right.
$4 trillion of options expiring across different areas.
Good.
So you got to kind of change where your delta is into that. And then you get the S&P rebalancing index. It's going to happen after the bell today at 4 p.m. and starts trading on Monday. We already know what's in and out, but that can also lead to some churn.
All right, we'll pay attention to that, of course. The S&P off about 18 points there. The NASDAQ off 0.5%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by BAM Mutual insures municipal bonds. It finances essential infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM.
BAM.
Insures. He
BAM?
loves saying that. BAM. Insured bonds. All right, futures. Right now we've got red on the screen. Investors kind of taking a closer look into the direction of interest rates after the Fed's 50-point rate cut this week. So we have NASDAQ futures down 0.4%. Dow futures, little change, down about 12 points. S&P futures down 0.2% or 17 points. The 2-year yield 3.61%, up 2 basis points. The yield on the 10-year 3.73%, and that's up 1 basis point. To commodities, check in with spot gold, $2,612 an ounce. We have Brent crude lower at $74 a barrel, WTI crude at $71 a barrel. Shares of home builder Lennar down more than 2%. Fourth quarter forecast fell short of kind of more ambitious expectations. And then a few companies making news. We have Macy's. They plan to hire more than 31,000 seasonal positions. It's taking place at Macy's, Bloomingdale's, Bluemercury stores. It's a lot. Distribution centers too. And then on the flip side, you have Warner Music. They want to eliminate 750 jobs, 13% of its workforce. The reason, well, it increased the targeted cost savings for its restructuring plan. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Lisa Mateo, that's a Bloomberg Business Flash. Back to you, Paul and Alex.
All right, thanks so much, Lisa Mateo. I'm Alix Steel, sitting in for Tom Keene, alongside Paul Sweeney. Dan, does that mean there's not going to be any sales for the holidays?
Well,
Is that my interpretation?
I think you're going to get sales.
Okay, because you know me.
Yeah, I know you. You're the sales. I know. You just look for the sales.
I look for
Why not? Why wouldn't you?
Yeah, 90% off on Yooks. I'm just putting that out there. Okay, in my other day job, I love focusing on oil as well as the energy transition, and the next guest is well positioned to talk about both. Joining us is Jonathan Maxwell, CEO and co-founder of Sustainable Development Capital. That firm was founded in 2007 and is really associated in the sustainability markets and its dedication to move on efficient and decentralized energy solutions. My takeaway in that is that it's investing in the energy transition and trying to do all of that profitably, which a lot of firms and companies are having a hard time doing. Jonathan, it's great to have you here. Thanks for joining us. You guys have projects pretty much everywhere. You've led energy efficiency project investment funds in the UK, Ireland, Singapore, and New York, and you operate across many regions of the world. What's the favorite thing that you have right now in the space that you're most excited about?
Right. So first of all, great. Thanks for having me on. Favorite thing I have is dealing with the world's biggest problem in the energy sector. The dirtiest secret is that most of it's wasted. Paul and I have spoken about this many times before. So in the US, just to give you the numbers, roughly 2/3, 67% of the US's energy is rejected somewhere through the generation of energy, the transmission, the distribution. So things I like to do the best is to basically just solve that problem. And what we do, for example, most of that energy gets lost as heat. So when we go into industrial processes, like steel mills in Indiana, we capture the waste heat that's coming out of industrial processes, and we recycle it back into power and steam, so that that heat doesn't go to waste, but is instead recycled. We instead of just capturing carbon from natural gas facilities, we capture the heat, and we use that to provide heat services. The world needs as much heat as it does electricity, in fact, quite a lot more. So that's my favorite type of project. It's basically generating energy for buildings, industry, and transport, largely using waste heat or waste gas. And we've got, as you say, investments now in 10 countries, about 55,000 buildings, and industrial facilities connected to our projects. It works, it's profitable, and the fuel is effectively recycled waste a lot of the time. And that, for me, is one of the greatest, largest, fastest, cheapest sources of greenhouse gas emission reductions and sustainable investment.
Jonathan, we've spoken to you several times now about this, kind of recapturing or just limiting wasted energy. Yeah. Where do you find the most receptivity to your arguments, to your business thoughts here?
So the biggest market in the world for us is actually the United States. It might sound counterfactual because, I think there is obviously a split debate over this. Do you go green, or the United States is the world's largest oil and gas producer in the world now, bigger than Saudi or Iran? But the reason I think it works well in the United States is because of the economic focus, right? Cutting waste, in other words, doing the same or more, just using less energy, not because you're trying to skimp and save or degrowth, it's because you're just being more competitive and more productive, is a basic American commercial value. So we see huge take up to try and deliver energy services cheaper, cleaner, more reliable. So on-site generation and being more efficient. America is by miles our biggest market. Europe, after the Russia-Ukraine crisis, having said that, suddenly had to wake up to energy security crisis, very high prices, and trying to do something about carbon. And the European Commission came up with a policy, 3 words: energy efficiency first. So I think we're starting to see the idea catch on, not just in America, but around the world.
What part of this, though, is dictated on policy? Because clearly this is most definitely in the crosshairs for the U.S. presidential election. How much of what you do is dependent on what governments do?
So what we do typically is focus on projects that are commercially sustainable. So going back to the point I made, if the grid is wasting 2/3 of the energy and we can solve that problem by building energy services at the point of use and actually being efficient, it's cheaper. It's not just cleaner and more reliable, it's also cheaper. Now, these are, again, fundamental core values, right? Energy security, cost efficiency, and, if you're into it, decarbonization. And you say that we're in the crosshairs. Well, there are things that are in the crosshairs. The Republican movement now looking at potentially getting rid of the power plant rule, the vehicle efficiency rule, the Inflation Reduction Act, and so on, but coming out of the Paris Agreement. That will set back renewable energy production. But renewable energy is a relatively small part of the US energy economy. The biggest part, which I think is we're not in the crosshairs, the biggest part is what's going on still today. Most of it's fossil fuels and most of it's being wasted. So I think this is a bipartisan, basic commercial imperative. In fact, what on earth is going on if companies as well as governments are wasting so much energy?
So, Jonathan, what's a typical client for your firm? Is it an oil and gas company? Is it a utility?
Or a big office building or something?
Big office building, exactly.
Most energy is used by buildings, industry, and transport. Most people think of the energy sector as if it's a big utility or the grid, which is the customer, but actually they're not the customers. The customers are buildings, industry, and transport. That's where the energy goes. So those are our customers. Now, who are customers? The biggest, fastest growing sector, and this is interesting, is obviously the data center market, particularly given the rise of AI. Why does AI matter? Because it requires 8 to 10 times as much energy as the data center, typical cloud data center. And these things are growing, proliferating. It's a very fast moving market. One of the largest demand centers for energy in the world, and very, very fast growing. So that's one key area. By the way, recent report this week saying that potentially that could increase overall electricity consumption in the US by 9% over the next 4 years. Second big area is public buildings. Government, 45% of GDP typically in most countries like the United States or Europe. The government is a massive energy user. Hospitals, universities, municipalities, and then the last is steel, cement, chemicals, plastics. That is industry. So it's actually heavy industry. It's public buildings and it's data centers. That's where most of the action is. But that's where you can create investable deals and investable solutions that cut costs, improve productivity, and deliver investment returns.
All right, Jonathan, thanks a lot. We very much appreciate it. Jonathan Maxwell, CEO and co-founder of Sustainable Development Capital. Tangentially, we had a great article out today on the Bloomberg that talked about Microsoft's AI power needs, looking at a revival of 3 Mile Island. So Constellation Energy is the biggest U.S. operator of nuclear reactors, and they expect 3 Mile Island to go back into service in 2028.
Really?
Yep. And sort of, it's going to be a lot cheaper to reboot and extend life than it is to build a new nuclear reactor or a small modular nuclear reactor.
I was at boarding school in New Jersey in 1979 when 3 Mile Island happened, and parents took their kids out of school and took them away from the Northeast.
I mean,
it was crazy.
It's fair enough.
Yeah.
But it's just you need all of that energy, and they need the carbon-free electricity for the data centers. It's a great piece out on the Bloomberg. You should definitely check it out. All right, coming up, Gene Goldman is CIO at Cetera. We'll talk about asset allocation opportunities after that 50 basis point cut this week. This is Bloomberg Surveillance. Good morning. Happy Friday.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Could that euphoria around the Fed's 50-point rate cut this week be fading? We have futures falling. NASDAQ futures down about 0.4%, 93 points. Dow futures little change, down about 26 points. S&P futures down 0.3%, or about 18 points. We have the two-year yield 3.61%, up 3 basis points. A yield on the 10-year 3.73%, and that's up 2 basis points. Europe stock 600 right now down about 0.7%. Mercedes-Benz Group, they cut its financial forecast for the year. Shares, they were down as much as 7%. Now they're down about 1.5% in Germany. We'll stick with cars. We'll go to General Motors. Their Cruise, it's set to resume robo-taxi testing in California this fall. It's the first time since its license was suspended back in October after that pedestrian accident. And listen to this. Warren Buffett's disposals of Bank of America shares have covered his investment cost of $14.6 billion, wow, leaving him with a stake worth of more than $34 billion. That's pure profit. Not bad. That's a Bloomberg Business Flash. Paul and Alex.
I don't understand. Those numbers are big.
Those are big numbers. And he's selling the stock. It's all profit. I mean, he's got Apple. I mean, you just think about the great financial crisis when Goldman Sachs had a period of concern there. He comes in and takes that preferred. I've got the capital. We're going to put it in preferred stock. I want a big coupon. He gets it. It's just it's just extraordinary what he's done there. And there's a lot of folks that try to replicate what they do there at Berkshire Hathaway.
And there's an ETF, right? Isn't there an ETF that's going to come out that they want to carry a fund that's going to try and track
really
investments or something? I think I saw that the other day.
I think there'd be a lot of demand for that. All right, what do we do here with this marketplace? We've got the Fed cutting rates. We don't know the cadence and the path, but they're cutting rates. That's a good thing, I guess, for risk assets. Earnings kind of holding up here. It feels like that's a pretty constructive environment for risk assets. Let's see what the pros are doing out there. Gene Goldman, he's the CIO of Cetera. And Gene, I'd love to get your thoughts on kind of what was your takeaway from the Fed rate decision this week, and did it change your outlook for stocks and bonds and that kind of stuff?
Thank you so much. And good morning, Alex and Paul. Thanks for having me back on your show. My big takeaway right away, we're going to the meeting. I thought the Fed would just cut by 25. The 50, I don't think the Fed needed the 50. Unfortunately, I think the market wanted 50, so the Fed followed 50. You think about this a week and a half ago, 2 weeks ago, Williams and Waller both alluded to 25. What really changed? Because we have above trend growth, above trend inflation. The labor market is slowing down, but it's not bad. We still have 1.1 jobs for everyone looking for a job. Jobless claims, if you look at sort of the trend, they suggest about a 4% unemployment rate. What worries us with the Fed cutting rates really abruptly is that now you have lower borrowing costs, could lead to stronger data. We did see some stronger data yesterday. You could get a yield curve steepening. But here's sort of like the big point. Governor Bowman came out and she dissented, but we saw greater indirect dissent. 2 of the Fed members said they don't want to reduce this year. 7 said they favor just 125 basis point cut. So you take all this together, to your question, Paul, is that we expect a market melt-up as possible, that the S&P is up 38% since the October 23rd correction. You take all this together, multiple expansion, which is much more riskier than earnings expansion, it could lead the market into some really uncharted territories.
So uncharted territories, what does that mean then for asset allocation? How do you navigate that?
Sure, I think, and great question, and thanks, Lisa. Alex, sorry, excuse me.
That's okay.
Great question, in the sense that we do think a correction is possible. We do think a pullback is possible. It's a classic buy the rumor, sell the news. Stocks, the S&P is up 20% this year. Small caps have had a great run, up 7 straight days. But this suggests to us, on the good news front, market breadth will widen. We see this every time the Fed cuts rates. But what do you do from a portfolio standpoint? Near term, we are really looking, focusing on the U.S. We're also focusing on liquid alternatives. We're also broadening our exposure to small caps, mid caps, playing the whole market breadth game. And again, liquid alternatives, those things that zig when the rest of the market are zagging, are a great opportunity. But we don't see a bear market. A bear market, you need a recession. That's not our base case for the next 12 months. We do see near-term volatility, but with about $24 trillion of cash, savings, money market funds, all on the sideline, ready to get in on better valuations, we do think any type of pullback or correction is pretty much the limit, and there'll be a buying opportunity.
All right. So, Gene, it's interesting here. I mean, a lot of folks are just wondering kind of where do we go from here? And, it's been such a long period of time since we've had a declining interest rate environment here. I mean, do I stick with the big tech stocks that have been such a good move for me, or do I try to find some value out there in the equity markets? What are you saying to folks these days?
Yeah, and first of all, to your question about yields, we do think yields probably hit their 2024 low. We do think yields are likely going to pull back. Part of the fact is the steepening yield curve, you have the lower 10-year, you have lower short-term rates. This puts upward pressure on inflation down the road. We don't see inflation surging dramatically, but now we're starting to watch inflation a little bit more carefully. But what do you invest in right now? Our favorite sectors remain financials. The steepening yield curve is great for financials. Also, no recession. We like defensive growth. We like healthcare. And, I know utilities have had a little bit of a tough time the last couple of days. We still like utilities, especially with generally lower yields. And you think about utilities in the second quarter, earnings growth up about 21% year over year. Healthcare up 18% year over year. So good earnings stories with high quality focuses. Again, financials, healthcare, and utilities.
And my whole shtick is that utilities, yes, it's a yield play, it's a safety play, and I also wonder how much of it eventually will become a growth play, as we just talked about that article on Bloomberg that Microsoft needing that clean energy for data might see 3 Mile Island reopen through Constellation Energy. Okay, what about the least favorite sectors right now? And is it a least favorite sector because of a growth story, or is it least favorite because of headline risk or election risk?
Yeah, I think my least favorite sector is energy. Energy, first of all, we all know the adage, the biggest headwind to energy is high oil prices, the biggest headwind to oil prices. Oil is struggling. We are fairly much in a peak driving season. But what concerns us is that whoever wins the election, whether it's Trump or Harris, under Harris, obviously there could be more regulations around oil. There could be some pressure on oil prices. But under Trump, you may see more drilling, which seems like a great perspective, but now that's more supply going to the energy market. And we are already at record levels of production. We're already at record levels of exports. So where's the oil going to go? So we see, regardless of who wins, pressure on oil prices going forward. And then if you think about the global economy, you saw Japan come out a couple of weeks ago and say GDP a little bit lower than expected. Europe is still kind of stuck in a little doldrums. Take this together, energy remains our least favorite sector.
Fixed income, Gene. I can sit here in a 2-year treasury, get 3.6%. It's not the 5% that I got a few months ago, but still not bad for no risk here. Do I sit there in the treasuries, or do I take some credit risk here?
Yeah, there's always risk in everything out there. There's no free lunch, as we all learned. But I do think yields are going to move higher a little bit from these levels. Yes, with the Fed cutting rates, this puts lower borrowing costs, as we know. This puts also upward pressure on economic data. We saw economic data yesterday and the day before coming a little bit stronger than expected. We do think this puts upward pressure in yield. So while our portfolios, we've been aggressively pushing up duration to be closer to the benchmark for the last year and a half or so as the Fed has raised rates, we think maybe now's the time to sort of ratchet some of that duration back a little bit. We think a lot of the gains in the treasury market have already been seen, especially for this year.
Do I move my money in money market funds somewhere else? Or let's be honest, when do I do that? How many rate cuts do we have to see to make me want to do that? Because currently it's still nice and juicy just sitting there.
Yeah, no, that's a great point. But I think market investors are going to have a FOMO, fear of missing out on the stock market.
Right.
We do believe, we would, if you're going into risk into the market right now, we would do it carefully. But we do think if there is a pullback, if there is a correction, and you look at the S&P at around 57.66, a good pullback, likely a target, near-term target, maybe down to the 200-day moving average around, say, 5,200. That might be a good buying opportunity, a good 9 to 10% pullback. So we do think that's an opportunity to move money from money market, from savings into the market at that point. Because again, there's lots of money on the sideline waiting to get in for better valuations.
So, Gene, are there some sectors that you like out there that maybe screen well to you right now in what appears to be a declining interest rate environment?
Yeah, still our favorite sectors remain financials, again, steeper yield curve, especially no recession, near term, healthcare, defensive growth, utilities. And we talked about utilities, but think about utilities. Utilities, as we all know, benefit from lower interest rates. But AI is playing a really big role in utilities. The ability to move around and figure out where energy, electricity should be allocated based on demand. And AI is going to really help utilities on a go-forward basis. We love those sectors. And I think overall, we love the U.S. stock market right now. We do expect the dollar to continue to weaken somewhat, which offers some opportunities to invest outside the U.S. But we do think the dollar weakness may be a little bit over-exaggerated. So we will be dipping our feet into foreign a little bit more, but again, watching this very carefully.
All right, very good. We appreciate that, Gene Goldman. He's the CIO of Cetera. Talking about these markets here, we've got, again, the Fed cutting rates. We're in a declining rate environment. We've got some decent earnings growth out there, double-digit earning growth. What is, presumably, that makes for a decent backdrop for some risk-on assets. So we'd like to talk to the pros and see what they're doing these days with our news in New York City. Here's Michael Barr.
Thank you very much, Paul. Alex, Lisa, North Carolina Lieutenant Governor Mark Robinson, the Republican candidate for governor, has refused to leave the race. It comes after a CNN report that he made explosive remarks on a pornography website, including, "I am a black Nazi," and another calling for the return of slavery. In response, Robinson posted a video on X saying the words are not his and blamed his opponent, North Carolina Attorney General Josh Stein, for a story Robinson said is false.
Let me reassure you, the things that you will see in that story, those are not the words of Mark Robinson. You know my words, you know my character, and you know that I have been completely transparent in this race and before.
Robinson faced a midnight deadline to withdraw ahead of the distribution of ballots beginning today. Meanwhile, former President Trump courted Jewish voters last night. He was the headliner at the Israeli-American Consul's National Conference in Washington, D.C. last night.
I'm here today to tell the Jewish American community that this ugly tide of anti-Semitic, pro-Hamas bigotry and hate will be turned back and crushed starting at noon on January 20th, 2025.
The event was titled Fighting Anti-Semitism in America. Vice President Kamala Harris took part in a live stream from Michigan hosted by Oprah Winfrey. It's called Unite for America, and it featured a Q&A, much like Oprah's old talk show. Two women at the live stream told their healthcare stories, including one woman who was raped by her stepfather as a child and a mother who lost a daughter to complications from an abortion pill.
Among everything that is wrong with these bans and what has happened in terms of the overturning of Roe v. Wade, it's a healthcare crisis. It's a healthcare crisis that affects the patient and the profession.
The vice president was also able to offer her thoughts on her economic plans. Israel has attacked Hezbollah again, this time destroying rocket launchers in southern Lebanon. The militant group is vowing revenge for earlier attacks this week. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Paul, Lisa.
All right, thanks so much, Michael Barr. So here's the story that I'm kind of obsessed with this morning, this Mercedes story.
Yes.
So the headline yesterday around the closing bell was that the company is warning about a rout in China that's hurting its profits. It's weakness in China. It's also weakness in Europe, too. Yep. It may be the mix of its cars, sure, but this is not like a primarily EV story. This is a weakness in China story, and it just makes it even more important because how do you invest in something like European stocks that have such a tight tie to China that continues to underdeliver in terms of growth?
Yeah, I want to talk to the folks maybe next couple of days, the China Beige Book people, because I really want to get a sense of how deep this economic uncertainties or economic decline in China is right now. I mean, it just seems like it's you know, we know it's in the property sector. We know that hurts the Chinese consumer, but boy, we're seeing it everywhere. We're seeing a lot of companies that rely on China, like Mercedes, calling out the weakness.
So I was talking to the head of oil trading over at Trafigura, and he was in a conference in China, and he was saying that, look, everyone knew the property sector was bad, but what stood out to him is that everybody, particularly the Chinese, said the whole economy is bad. And for the Chinese to say their own economy is really weak is very different than to saying it's in a property sector issue. And that is kind of leading all the weakness that we can see, particularly when it comes to the commodity market.
Yeah, I'm not sure what the response can be from the Chinese government here and how effective it can be. So we'll keep an eye on that. But China apparently weak. Mercedes. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. Right now we have NASDAQ futures down about 0.4%, 84 points. Dow futures little change, but down 22 points. S&P futures down 0.2% or 16 points. We have the 2-year yield 3.61%. That's up 2 basis points. The yield on the 10-year 3.73%, and that's up 1 basis point. Few companies making news. Johnson & Johnson. Sources say the company lifted its baby powder settlement offer to more than $8.2 billion from $6.5 billion. Their shares down about 0.7%. And sources say OpenAI's latest $6.5 billion funding round is oversubscribed. And investors, they're going to find out today whether they're part of that deal. And as you heard Alex mention, yes, Microsoft's AI needs are sparking the revival of Constellation Energy's 3 Mile Island nuclear power plant in Pennsylvania. It'll invest $1.6 billion to get it back in service by 2028, agreeing to sell all the output to Microsoft for those data centers to power AI. That's a Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find this. Bloomberg Surveillance this morning is brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and gets started today. Let's get the latest on what's happening down in Washington, D.C. We had a star-studded little event there for Kamala Harris. Joe Matthew joins us. He's the host of Bloomberg's Balance of Power. Joe, I was just reading the Bloomberg News kind of reporting on this story. We have, some Oprah Winfrey, some A-listers there, Meryl Streep, Jennifer Lopez, supporting Kamala Harris. Does this stuff matter in the balance? I guess when the election where literally individual votes may be very precious, maybe it does.
Well, look, they got hundreds of thousands of people to watch, and that's publicity that is difficult to pay for. When you're buying 30-second ads, people tune that stuff out. This is pretty impactful. Whether it added voters to the mix is a question to your point, Paul, here. But yeah, look, you show up with Meryl Streep, Chris Rock, and Oprah, you're going to get some attention here. It was a lot more about personality. She made more news about saying that she'd shoot somebody if they broke into her house than any actual policy proposal. But there were a lot of emotional conversations with people who were there talking about life in a way that you might associate more with the Oprah Winfrey show than a campaign event. And that's the idea, is to not make this look like a canned commercial. If you're with us on YouTube, you can see some images of this now. They had a pretty good turnout. And by the way, it wasn't in Washington. It was in Michigan. Right. And that is not by accident. She'll be headed to Wisconsin and Georgia today. Paul, it's all about the swing states, no matter which celebrity is on the stage.
So Kamala Harris has taken some heat for not doing more off-the-cuff, unscripted events, not talking to the media directly. But I'm wondering if this is the way forward. Like, not necessarily let's do a one-on-one sit-down with ABC or CBS, but let's do these kind of streamed events, hanging out, much more relaxed vibe. Is this a specific direction the campaign's going to go?
I think it is, and you can kind of find examples of this on both sides. I mean, Donald Trump sitting down with Gutfeld is not exactly a hard-hitting interview. Everybody's, preaching to the choir here. But look, this has been the mantra since Kamala Harris got to the top of the ticket. Remember all these Zoom fundraisers? All of these groups were part of this event last night, too. White dudes for Harris, cat ladies for Kamala. This has been the essence of the campaign as opposed to a more traditional approach. And think of how splintered our media is now in 2024. What hard-hitting interview are you going to do that gets you a gotcha question and a slip-up and a potential couple of points in the polls here? They're feeling really good about where they are in this race, whether that's justified or not, and sitting down with hard-hitting journalists is probably not part of the equation the next 46 days.
All right, Joe, what's part of the equation, do you believe, for former President Trump and his campaign at this point?
Well, it's a lot of the same. I mean, look, he's talking to very friendly interviewers. He did an interview on Newsmax last night where he made a little bit of news here, holding rallies in some questionable places. The Trump-Vance ticket has been in the swing states, but they're also going to places like New York, like Virginia, like California, that have some people scratching their heads just a little bit. I'm amazed you haven't asked me about North Carolina yet, because that is a one-point race right now. I hate to bring this up, but only because it's so close, guys. This is the Lieutenant Governor, Republican Mark Robinson, in this very salacious CNN story about him trolling social media sites, referring to himself as a perv and a black Nazi. The midnight deadline to have him removed from the ballot has passed. This is the race. And considering the fact that this is a 1-point race in North Carolina on the presidential level, it is not something that the Trump camp is probably very happy about.
But, does it matter? And I say that because does this stuff actually matter? Trump has said crazy stuff, and so this happens. Is it going to move swing voters? Those that vote down the line, that stuff's not going to move the needle.
Well, in North Carolina, it will. Mark Robinson is already losing this race by 7 to 8 points before what he said in this story. And while he is claiming to stay in this race, this is very damaging stuff. And Alex, I'm not going to tell you to go read these. I can't even read this stuff on the air about what we're talking about here. This has to do with children. This has to do with some very off-color stuff that is not going to play in North Carolina. And I'll remind you as well, this is the only Democratic-held governorship that is up for election here in a state that Donald Trump won in 2020. Roy Cooper, who Anne Marie is going to be talking to a little bit later, the governor, elected separately from the lieutenant governor, is out because of term limits. And that is a seat that may well, and polls will tell you, is going to stay Democratic.
Interesting. All right, we'll pay attention. I'm going to read in on that over the next break here.
I think we both are.
Don't blame me for it, Paul.
I think I was trying to avoid it.
Yeah, we've been trying to avoid it, Joe, but you brought us in here, Joe. So Joe, between now and Election Day, is it just focusing on the swing states? Is that what our national elections have become these days?
46 days, I think you said.
Absolutely, yes.
Yeah.
Absolutely. There's only 7 of them. Our poll is in the field right now, post-debate. It's going to be interesting to see. But yeah, look, we're fighting over an incredibly thin slice of pie here in a country that is so close. People are hoping for a blowout one way or the other, so we don't have another January 6th or another Stop the Steal or whatever it is, but there are no indications of that. Look at Pennsylvania, another 1-point race. Look at Michigan, not that much different. What is different today as we talk here, guys, is that Joe Biden was down anywhere from 5 to 10 points in a lot of these states. Kamala Harris has brought it up to a statistical tie, so they've got some work to do in the next 46 days.
Did the Fed 50 basis point cut change any of the messaging from either campaign?
Well, for Trump, it's been, he's calling this a political motivated move and saying that the economy is obviously worse than we thought if they felt a need to cut 50. Kamala Harris hasn't been going there. She's pledging independence of the Fed and so forth. But it's, there is a psychological impact. You're talking to a lot of these same people, young people, that say, my God, I might be able to buy a house now. That sort of wealth effect, if we can even call it that. And of course, Wall Street setting records here under the Biden administration does potentially play well for the incumbent. But I don't know how many people sat down last night talking about the Fed over the kitchen table. I think that might be more for us.
How about the vice presidential debate coming up? Does that?
Wednesday? Tuesday?
Yeah. How important is that, Joe?
It's Tuesday, October 1st. We're going to come up for special coverage. It's going to be in New York.
Okay.
And you know what? I don't know is the real answer. This is typically not an event that matters a lot. Most people, you see a huge decline in the ratings. And most people do not vote on who the vice president is. But look, everything's different in this race. 67 million people watched that last debate. And a lot of people want to know what this Tim Walz is all about. They think that, they're eating animals in Springfield based on what J.D. Vance is. There might be an element that draws people to watch this beyond the normal trappings of a campaign. We'll be there for you and let you know what they say. We're always watching, so you don't have to.
All right. We'll buy you a slice of pizza up here, Joe, in New York.
Thank you very much.
Joe Matthew, thank you so much. We appreciate that. As always, Joe Matthew, going to be non-stop for Joe Matthew between now and Election Day. He's the host of Bloomberg's Balance of Power. And as Joe mentioned, there's nothing about this, I guess, election cycle that's like what we've seen in the past. It's not your grandfather's election cycle.
No,
I guess that's safe to say.
I feel like we say that every year, and every year it becomes more and more not our grandfather's election cycle. Interesting to see, though, the markets are declining just a bit. The S&P futures are off by about almost 0.2%. NASDAQ 100 minis are off by 0.8%. I just want to point out this rebalancing today is going to be huge. So definitely watch tech. Piper Sandler said that you could see as much as $40 billion of net buying in technology stocks as we have to rebalance these indices, and that Apple's going to make up the bulk of that. So watch that, I think, as well. Plus those options, triple witching. It's a thing. It matters. It's a big deal.
Pat Benatar. How about that? That's 80s. That just defines the 80s.
I love me the 80s, man.
The 80s were very good to me. Pat Benatar. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we got a lot of smart people. Brooke May, Managing Director at Evans May Wealth. Get her thoughts on these markets. Jennifer Lee, Senior Economist at BMO Capital Markets. What did she make of the Fed rate cut? What does that mean for her economic outlook? Lauren Goodwin, Chief Market Strategist at New York Life. She's going to be in studio and give us her thoughts for these markets for this economy. So all that is coming up. Bloomberg Surveillance today is brought to you by Cohn Resnick, Advisory, Assurance, Tax. Is your business future ready? Talk to Cohn Resnick's digital advisory team about strategies and platforms to drive competitive advantage. Let's get a Bloomberg Business Flash here with our good friend, Lisa Mateo.
You got it. And we got futures in the red. And this is after the S&P 500 notched its 39th record in 2024 and extended this year's surge to about 20%. So we have NASDAQ futures down 0.3%, 64 points. S&P futures down 0.2%, 12 points. Dow futures are little change. They're up about 2 points. We head over to the 2-year yield, 3.61%, down up 3 basis points. The yield on the 10-year, 3.73%, and that's up 2 basis points. To currencies, we have the dollar stronger. Japanese yen down 1% at 144.14 against the dollar. We have the euro, British pound stronger as well. The pound up after UK retail sales for August beat estimates. Over to shares of FedEx, really taking a hit, down 13%. Quarterly profit miss, softer 2025 outlook. Customers just opted for those cheaper shipping options. And shares of its rival UPS, we'll check in there. They're down more than 2%. On the flip side, shares of Nike up 7%. The company ousted its CEO, John Donahoe, who brought down a longtime executive, Elliott Hill. They took him out of retirement to replace him. Want to check with shares of rivals like Adidas, down more than 2% in Germany. Puma, down more than 4% in Germany. And today, Apple's new iPhone 16 lineups hit stores without the AI software. Shares are down about 0.5%, though. That's Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. I have not bought the iPhone. Paul is waiting for his. He will get in about a week. Will be delivered. Lisa, are you partaking here?
I am not, because I had an upgrade before. I was the lowest in my family plan, but now I've upgraded.
Right. Okay, so
that's good.
Do the other family members get the upgrade or not yet?
No one's getting upgrades.
Whoa.
Put down that hammer. Hardcore
She runs
mom.
that household, I can tell you that.
Oh, well, that's 100%. Who doesn't? Hello.
Yeah.
High five, Lisa. All right, market's a little bit mixed. You got options expiration today. You have somewhere between like $4.5 and $5 trillion worth of options expiring. That's going to be a busy day. You also have the ETF rebalancing, which means a lot of indices all across the board are going to be rebalancing, and in some ways it's going to wind up favoring tech. Piper Sandler is saying that you're going to have like $40 billion worth of tech buying in some of these ETFs. So it's going to be a very busy day. Is it a clean read? That's kind of my question. Brooke May, Managing Director at Evans May Wealth, joins us now. Brooke, if we just put aside maybe the price action yesterday and today, which I know is tricky because there's some technical stuff happening today, what's the best portfolio mix as we go into this Fed? Are we in this Fed cutting cycle?
Morning. We think that you really need to continue to have a diversified approach to investing. Obviously, big tech has been the place to be. Going into 2024, the earnings expectation was up 28% for big tech and only up 7% for the other 493 names. Now, going into 2025, we're expecting big tech to be up around 18% in earnings growth, where the broad market up 13%. So we're seeing much broader participation. And we think that right now you focus on areas of the market that have been very interest rate sensitive and will do well from rate cuts.
Hey, Brooke, let's talk a little bit about valuation. I mean, I've kind of got the S&P 500, I don't know, depending on whose math you want to use, like 21 times forward earnings. Man, that feels expensive to me. Can you put that into context, how you guys think about that?
Yeah, it is expensive when you look at historical averages. But if you strip out, again, those big tech names, it's trading more like 18, 19 times forward earnings, which is really in line with the 10-year average. You know, when we look at right now, though, where the market's trading, we have a 5,600 to 5,800 price target on the S&P for year end. We're fully setting the expectation that we're going to have volatility over the next few weeks with the debt ceiling negotiations and an election. However, going into the end of the year, we wouldn't be surprised if we see another leg up in the market. There are quite a few tailwinds, whether that be the cash on the sidelines or, you know, just positive economic data coming out. But when we think about earnings, we think that we'll see about $280 in earnings on the S&P next year. You apply a 21 times multiple to that, and it gets you to 58.80 on the S&P 500. So it's going to be multiple expansion that takes us much higher. That said, the market can trade at pretty high multiples for a prolonged period of time. It isn't necessarily indicative that a correction is coming.
So let's drill down on that in terms of, say, where the earnings are going to be. I mean, yes, you had the S&P closing at a record high yesterday, but so did mid-caps. Small caps still haven't. And I'm wondering if mid-caps is the sweet spot right now.
I don't disagree. You know, the higher interest rates are still relevant. And it's going to take probably at least a year for lower interest rates to start bleeding through to earnings. So small cap companies are going to be much more sensitive to interest rates. They tend to be less profitable than mid caps and large caps, therefore rely more heavily on debt, specifically floating rate debt. So mid caps can be the sweet spot. Valuations are a little cheaper compared to historical averages, and they also will benefit from rates being cut.
So let's think about sectors here. Are there some sectors that just kind of jump out at you? Because, I mean, you know, Lisa and Alex, they've been on long the Mag 7. They're clipping coupons all the way to the bank. How about for the rest of us?
That's why we still work here.
Yeah, exactly. How about for the rest of us, or maybe kind of looking for some value here? Is there some value out there in the marketplace?
We think so. We think that it's still not too late to get into housing stocks, for example. There's a demographic issue there. Right now, whenever we look at the number of households in the U.S., we're about 7 million too few homes short of what we need. And that's from a combination of single family and multifamily homes. We're bringing on about 1.5 million units more each year, but that only keeps up with household formation. And when we've got this shortage of supply, we think that that's going to continue to push home prices up. And home builders who've had to subsidize interest rates and had higher material costs, they're going to be able to have a little bit more pricing leverage going into a lower rate environment. So we like the housing stocks. We like the retailers that are associated with housing. And then in addition to that, we like the financials that have exposure to the capital markets. And we think M&A activity picks up, and that bodes well for them as well.
What happens in the bond market? Like, where do you think you want to be sitting across the curve?
It's tough. I think that you can go back now to more of a laddered approach. We're diversifying our clients across the spectrum of maturities. We feel like you need quality, and then to supplement that with some credit that's more on the high yield end. We don't think that we're going into recession. While defaults are up slightly, we don't see that being a meaningful problem. So you can allocate to some high yield in addition to high quality at this point in time.
So, Brooke, when you talk to your clients, what's kind of the question you're getting most often these days?
Of the election. Clients are asking, how are we going to position portfolios going into the election? And they don't always like the response. When you look back historically, whether it be a Democrat or Republican in office, the markets performed very similarly. And when you look at sectors that you would assume would do well or poorly under one administration or another, it doesn't always hold true. There are so many other economic factors at play. Great example, during the Trump administration, one would assume that energy stocks would do well, and in fact, they did poorly. During the Obama administration with the Affordable Care Act, you would assume that healthcare stocks would struggle, and in fact, they did well. So you have to step back and look at the macro environment and a lot of other factors that are at play and realize that U.S. businesses figure out how to make money in all environments. So we're not making big strategic shifts right now. Plus, it would really be too close to call where we stand looking at the election.
And it's so hard, right? Because some of the biggest impact is going to come through taxes, right? I mean, that's where, say, Goldman sees the widest spread between Harris's plan and Trump's plan in terms of what it would mean for the S&P. Like 0% hit to earnings versus like a 4% hit to the downside when it comes to earnings. But that also requires it to get through Congress. So it gets pretty messy pretty fast.
Mm-hmm. Yeah, gridlock is good. Gridlock is good for the market because there is less change. And you're right. There are certain factors that could impact the market. Taxes is one, regulation is another. And so as we go into the election, we are watching, a hit to the corporate tax rate would cut into earnings. But again, U.S. businesses, to use the word of the week, recalibrate and figure out how to make money in different environments.
All right, Brooke May, thank you so much for joining us. Really appreciate that. Brooke May, managing partner, Evans May Wealth. And that's something that Tom Keene has always said, which is companies adapt, whether it's even something as crazy as a global pandemic, you saw companies adapt and productivity remained high, and they adapt to higher rates, lower rates, higher commodity prices, lower commodity prices. Over time, companies
Yeah, also because and you would know this better than anybody here, is that they plan on like a 5 to 10 year, if not more, schedule, right? So they have to look through policy to some extent.
Yep, absolutely. And so if that's a change in the political environment, companies adapt. So we'll see how this plays out over the next, 46 days to the election. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, Lisa, Hezbollah launched 140 missiles into northern Israel in 3 strikes. It comes as Israel in the last 24 hours has ramped up airstrikes targeting Hezbollah sites in southern Lebanon. This week, pagers and walkie-talkies were detonated in Lebanon, and ABC is reporting that Israel created shell companies to manufacture and eventually sell the pagers to Hezbollah. According to the report, 1 to 2 ounces of explosives were planted in the pagers with a remote trigger switch to set off the blasts. Republican Congressman David Kustoff of Tennessee said the explosions send a strong message to Israel's enemies.
It seems like out of a spy movie, but these are real devices, and the Israelis have other means of attack if they need to attack.
Congressman Kustoff spoke to ABC. Senate Majority Leader Chuck Schumer says he's not going to wait for the House to try and pass a government funding bill. It comes as a government shutdown is looming in the weeks before the election. Bloomberg's Ed Baxter reports.
Senator Schumer says he will set up a vote for next week, this after the House failed to get it done this week. The hang-up being the GOP attaching the citizenship voting rider pushed by Donald Trump. Lawmakers like Republican David Kustoff say it has to be done.
I voted for the bill to fund the government through March, which the SAVE Act was attached to it, which prohibits non-citizens from voting. But in the end, we do not need a government shutdown. We need the government to continue to function.
House Speaker Johnson has not announced the next step. He's seeking input, including that from Donald Trump. Ed Baxter, Bloomberg Radio.
The North Carolina Republican Party calls it a political smear campaign after allegations against their candidate for governor. CNN reports Mark Robinson made inflammatory comments about slavery and other controversial topics on the message board of a porn website years ago, which he denies. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Paul, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Alex, I can't get over this story. Microsoft's AI power needs revival of 3 Mile Island. So the owner of the shuttered 3 Mile Island nuclear plant in Pennsylvania will invest $1.6 billion to revive it, agreeing to sell all the output to Microsoft as the tech giant seeks carbon-free electricity for data centers. I mean, I was a kid. I was in high school when 3 Mile Island had that, disaster there. One of the 2 reactors permanently shut, but the other one they just shut in 2019. So I guess they're going to ramp that one back up.
Yep, and that's going to cost a lot less than building a new reactor or a small modular nuclear reactor. And Constellation Energy is the company that's doing it, and they're the 6th best performing stock within the S&P this year.
No kidding.
No
Wow.
kidding.
That's the derivative play on AI. Great story on the Bloomberg terminal. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Red and green on the screen as investors take a little bit of a closer look into the direction of interest rates after the Fed's 50-point rate cut this week. We have NASDAQ futures down 0.1%, 36 points. Dow futures, little changed, up about 18 points. S&P futures down 0.1% or 8 points. The 2-year yield at 3.61%. That's up 2 basis points. The yield on the 10-year, 3.73%, and that's up 1 basis point. To commodities, we'll check with spot gold higher, 2,615 an ounce. We have Brent crude lower at $74 a barrel. WTI crude $71 a barrel. Shares of home builder Lennar down more than 3%. Fourth quarter forecast fell short of those more ambitious expectations. And then we have a few companies making news. Apollo Global Management secured a $5 billion from BNP to expand in private credit. And in other news, Hilton, Marriott, they're offering these one-of-a-kind experiences to lure their members to loyalty programs. How about this? Taking part in a McLaren F1 pit stop, that's one thing.
Matt Miller.
Or, yes, private tennis session with Daniil Medvedev. I can't even say Medvedev.
Even
Thank
I know.
you.
I saw him
You give
play.
me I'll do a private lesson with the.
You would do that?
No, with Sabalenka, the women's player.
Okay.
She's good.
That's it. I don't know. I think
is
I might
really
go
good.
for the pit stop.
She is like a powerhouse.
Yes,
I just don't know how they do that.
You know
honestly,
what my
for that
co-host
long.
is for the 10 to 12 today?
Oh, I do
Speaking
know.
of tennis, Molly Smith. We're talking tennis,
she knows
big
tennis.
time. Yep. All right.
That's going to be fun. I might tune into that. Okay, taking a look at the market. It's been a very busy week. We got the 50 basis point cut from the Fed. Now the question kind of is starting to trickle down in what that R star is, right? The real neutral rate. And what do we get to? And if R stars across the world are kind of rising in tandem or not. So let's get more on this with Jennifer Lee, senior economist of our BMO Capital Markets. She joins us now. Jennifer, are we finally seeing some central bank divergence in economies and divergence in R star?
Well, good morning, and first of all, thanks for having me. You know what? I think we've been seeing this divergence for some time now. We've been waiting for the Fed to finally slash rates, which it did this week. But everyone else has been like way ahead and they've been moving along quite firmly. And so even like this week alone, I can't remember how many central banks we've had, but I had to think twice. It's like, okay, who are we talking about, and are they hiking or cutting? And what their language was. So I was very confused. I was getting very confused, but it's like a big spread of views and direction of rates. But broadly speaking, obviously, rates are coming down, maybe not in Japan, maybe not in Brazil, but certainly in the more developed markets, of course, Japan as well. But, everything is coming down. In terms of where neutral is, I don't know. I don't think anyone really truly knows where it is. I think it's like right now we've got the Fed coming down to as low as maybe 2 7/8, I think, by sometime next year or in 2026, I guess. But everything is going to be, data dependent, obviously, and everything will be discussed on a meeting by meeting basis. And I sound like a robot when I'm saying that, but that's what everyone's saying these days.
Hey, Jennifer, I guess from everything I've read and talking to smart people like you, I kind of get the sense that the Fed is probably more focused on the labor market these days. How would you characterize the U.S. labor market?
I'm going to say that the labor market is still in decent shape. The fact that we're still seeing hiring, the fact that we're still seeing a plus sign in front of that headline, number. Of course, the headline payroll number, but of course the household survey is a little bit different. It's a little bit more flattish, not much change over the last little while. That's where things are a bit worrying, I think, for the Federal Reserve. And of course, you've got the jobless rate, inching higher from those lows. But just over 4% is still pretty low historically speaking, I guess. So I still think it's in pretty decent shape. And the fact that we still have, like one job opening per unemployed person out there, not as much as 2, which is at the max, but there are still job openings out there. So they're going to kind of work off that extra fat, so to speak, that's the lack of a better word, before they start, cutting into actual job cuts.
Mm-hmm. Right. So it's like not hiring versus cutting, and like that being a distinction. So what will be a trigger then for the Fed when it comes to the labor market data? Is it going to be an increase in the unemployment rate? Is it job growth dipping below 100,000? Like what's that specific data point?
I'm going to, if I had to pick one, if I was backed into the corner, I'm going to say the jobless rate. And again, it depends. There are always revisions to the job growth numbers, and it depends on if it's like we're looking at the establishment survey, we're looking at the household survey. But I think the jobless rate is probably what they're going to keep an eye on if they had to put something up at the top of the pile. And again, just making sure it's not rising too rapidly, and by this aggressive cut this week, I think they're just sort of cutting it off at the turn, and making sure that the labor market remains, as I say, in decent shape.
Jennifer, what's the story these days of the U.S. consumer? How do you characterize the U.S. consumer these days?
Oh God, I'm going to be boring and say they're still in decent shape too. The fact that they're more cautious for sure, but they still have jobs. They're still making a decent income. Average wages are about like 0.3, 0.4% on any given month, on average. But they're just being more cautious on what they're spending. We saw from the latest retail sales figures, we're still seeing retailers making more, selling more, and across but it wasn't exactly across the board, which is a bit disappointing. And my favorite indicator is always dining out, and that was flat. So that didn't give me any reason to, to get off my soapbox or anything like that. But I think, Americans are still decent shape, but putting it a little bit aside for a rainy day, which is, I say all the time, never a bad thing, but just going to more cautious going forward, and especially because, they're not really certain about how the job market's going to be panning out.
So clearly, not counting today, maybe the little softness we're seeing in the futures market, market's feeling pretty good yesterday. Is this kind of a great world for risk, or is this the right time to kind of get a little defensive?
I think it's a good time because of the fact that there have been, because again, we saw the Fed finally get off the sidelines and have an aggressive move. And it sounds like they're going to continue cutting rates going forward over the next year or so, but maybe not at that 50 basis point rate cut. Not that size, of course. Not a strategist, but our wonderful Brian Belsky did raise his forecast this week, and so he's optimistic for sure.
Jen, how are things up there in Canada these days?
Not as optimistic up here. This is where I'm going to be becoming a little bit more deflated. We are avoiding, the technical recession, I guess, on a quarter-to-quarter basis, but on a monthly, or when you're looking at on a per capita basis, we have GDP declining, which is not great. I'm going to get a little nerdy on you here, but we have like monthly GDP numbers, and they've been like steady, 0.4, 0.20, 0.4, 0.20, and it looks like July so far has been picking up a little bit as well. So we're sort of avoiding, getting off of the tracks, but we are still heading toward that slower growth rate or slower economic activity, which is why the Bank of Canada has been cutting rates. They cut rates already 3 times, and we expect further rate cuts to come. And who knows? We're still, inflation is coming down, which is good, and that's sort of more impetus for the Bank of Canada to continue cutting rates. We're actually going to be keeping an eye on the next inflation report up here, the next monthly GDP report, whether or not we're going to change our view from 25 to 50. So stay tuned. Very exciting.
Stay tuned. But it did. When I was up in Canada earlier this week and I spook to the deputy bank,
I saw you. It was great.
Canada. Oh,
yes.
were you there? Oh, either way,
I was
hi.
There.
But I think that the important part of that conversation was that I took away, the economies are just really different now. And particularly in the housing market, I bragged about my 2.75% 30-year fix. Everyone's like, no, do not tell us that, because they don't have 30-year fix.
I know. Be like, ixnay on that.
Yeah, it was like, I was like, oh, it's not a fun audience to appreciate that. But it's just like really different economies. And then how do you really manage that? And sort of you have to go it alone. It's not dependent on what the Fed does, which I found really interesting. Well, it's great to see you. I wish I would have seen you earlier in the week. Jennifer Lee, senior economist over at BMO Capital Markets, joining us on U.S. and also Canadian economies, joining us. Plus, then you get the elections here, and then you layer tariffs in.
Yep.
And then do we really see some economic dispersion?
Right. And then you've got, and energy is a big part of their economy, as is timber and those types of things, natural resources. Yep. So it's a big part of their economy. I did not know about that the U.S. is somewhat unique or somewhat different in fact that we do have 30-year fixed mortgages. Lots of the rest of the world do not have that. And that introduces more interest rate risk into their daily lives.
Right. And the transmission mechanism then through the housing market will be felt much more acutely in other countries than in the U.S., particularly if there's a structural shortage and a structural issue, and basically the handcuffed people to their home like I am with that 2.75%. All right, coming up, we're going to get more on these markets. Lauren Goodwin, chief market strategist at New York Life, will be giving her outlook for the economy, if the dovishness is overblown, and kind of what do you do and how you structure a portfolio as you take a look at a market with a little bit of a weakness on this Friday. Happy Friday. It is Friday. Right?
Yes, it is.
100% Friday.
But I'm working.
It's true. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Could that high surrounding the Fed's 50-point rate cut this week be fading? Well, we've got a mixed look right now. NASDAQ futures down 0.1%, 35 points. Dow futures little change, up about 22 points. S&P futures up 0.1% or 7 points. With the 2-year yield 3.60%, that's up 2 basis points. The yield on the 10-year 3.72%, and that is little changed. Europe stock 600 right now down 0.6%. Mercedes-Benz Group cut its financial forecast for the year. Now, shares were down as much as 7%, now down about 1.5% in Germany. We'll stick with cars. We'll go to General Motors Cruise, set to resume robo-taxi testing in California this fall. And this is really the first time since its license was suspended back in October after a pedestrian accident. And finally, assign more workers returning to the office. According to the National Coffee Association, coffee drinking outside of homes finally rebounded to pre-pandemic levels. There you go.
I love this
People
indicator.
coming back to work. That is a Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. Economic indicators today brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. All right, the Fed cut rates 50 basis points. Was that the right move? Was 25? I don't know. Let's talk to somebody who does this stuff for a living. Lauren Goodwin, Chief Market Strategist and Economist at New York Life. She joins us here in studio. Thank you very much, Lauren, for coming in our studio. What do you think? What do you make of the Fed? Was that the right move at 50 basis points?
Yeah, I do think it was the right move. I mean, this first cut, it's really just the first step back to neutral. And so moving as quickly back to neutral where the Fed policy isn't constraining the economy is the right move if the economy is what you're thinking about. And in a labor market that has slowed significantly, starting to move in that direction, I think makes sense. Now, when it comes to what is then the next question for the markets, I think how far can the Fed go? What is neutral is really the next question. And the Statement of Economic Projections had a range of just about 2 to 4%. That is the entire range of the U.S. economy. And so it's a lot of uncertainty around what happens next.
And then if you just take a look at that, so if you go to 4%, what's the next cycle look like? If you go to 2%, what's the next cycle look like? And those are very different economies.
Very different economies. And what I'm seeing among our clients is that 50 basis point cut, reinvestment risk is now the most important, most urgent thing that investors need to be thinking about. For everything else, why would you make a ton of moves, including Fed voting members who are making these estimates, until you know the outcome of the election? Now, election isn't typically the pivot point on how to invest, but what we're looking at is an environment where a sweep in either direction is likely to mean more spending, more inflation, probably more durable rates, also probably more volatility as markets are concerned about the level of deficit in the U.S. economy. Mixed Congress, again, with whoever's on top, that economic trajectory over the next 4 years looks really different. And so the rates environment looks really different.
All right, so I've got a Fed that's cutting. What do I do to my asset allocation? Am I still 60-40? I mean, what am I doing here?
From my perspective, 50 basis point cut, the Fed has started an easing cycle. And as I mentioned, reinvestment risk is an investor's number one priority. So the first thing you're doing is thinking about moving out of cash, where 5.5% easy earning just isn't going to be the case anymore. And so moving from cash into short duration fixed income, really just buying bonds in general, I think, is where most investors will be focused. When it comes to equity, though, do you take equity risk off the table and also activate that in bonds? I think it can make sense for investors who are concerned about valuations, which sectors are likely to win as a result of the election, whatever the case may be. Taking some of that equity risk and activating it in high yield, which is equity-like, where you have a coupon.
That's been the best performing fixed income sector this year, right?
Well, precisely. Yep. And it's because you have an economic environment that's constructive, an asset class that's higher quality, and again, investors that are concerned about both valuations and cash rates, which are liable to move lower.
So you mentioned high yield, but like where on the Like, how low do you go?
Strictly high quality when it comes to
high quality, high yield.
Precisely.
Okay. So then what kind of distress might we see in the low end? Like, and that's just my other way of asking, what kind of default cycle are we going to look like, or has that been saved or / pushed off again?
I'm not convinced that we've sort of reset the cycle. And so when it comes to what does a default cycle look like for the consumer, for companies, mild as a result of the support that the economy's seen over the past 4 years. And by that, I don't just mean strong economic growth, but also the pandemic era programs. But in order for lower quality elements of the market, your triple Cs, and also for small caps, asset classes that really need a cyclical overturn to outperform, I don't think we have seen that reset in the cycle that will stoke durable performance in these asset classes. Doesn't mean you won't get boosts on days when, good economic news is good news, but the fact that the Fed is now focused on the labor market over inflation means that we are going to continue to see a reactive market where outperformance in those asset classes, I think, is short-lived.
All right. So as a chief market strategist and economist at an insurance company, how much risk do you guys take in your equity portfolio, or do you just stick with the really blue chips? How do you guys allocate?
Well, just to clarify, I work in the asset manager of the insurance company, and so we look, we're really looking at a broad client base, institutional, retail, et cetera. But when it comes to how do you think about, let's say 20, 30-year risks, this is an environment where, you have to expect, the best you can do, that interest rates, inflation have reset themselves as a result of the pandemic. That's a change, a major change when it comes to asset management relative to the conversations we were having 5 years ago. And so the dynamic of, in a phase of reglobalization, capital intensivity, electrification, that's an environment that over the next 10 years is likely to lean higher inflation, higher rates than not.
Which also raises the question in the short term, though. Do we expect a resurgence of inflation or demand because of the cuts? Like, I appreciate that one side of the economy will still be struggling, but on the other side, does that kind of reignite?
It's one of the key risks to the market activity that we're seeing today, but it's not one that I'm worried about yet. And there's a couple of reasons for that. The first, the Fed's cutting, but still restrictive. They waited. If anything, they may be a little bit behind the curve. They see inflation really under control. But also, when I think about, we can all name different catalysts for growth going sideways or downward. But when I think about what would be the catalyst for really re-accelerating the economy, we've had revenge spending. We've had an incredibly tight labor market. We've had a housing market that, despite higher rates, house prices are really high. And so though I can see an enormous benefit of rates moving lower for variable rate borrowers, households, and companies, if you're sitting on the precipice of trouble, maybe not even default, but just trouble, rates moving lower don't send you off on a spending or a capital investment spree. They have you feeling a little bit of relief.
I don't have to fire everybody and pare back all my spending programs.
Exactly. But the source of re-acceleration, from my perspective, is elusive.
Do you guys look outside of the U.S., and if so, where?
Everywhere, globally. Until the Bank of Japan started its rate hiking cycle, this is one of the areas where we were the most focused, because we see such interesting structural change there happening after a couple of decades, reinvigorating capital investment from their companies, really a beneficiary of reglobalization. But when it comes to the broader global perspective, what I think is most important is that here in the U.S. and globally, how we think about supply chains, it's not a new story, but it's a really, really important one, because it's one where not just technology, which has been such a huge beneficiary of capital investment over the last couple of years, but increasingly building repetitive supply chains, been a big surge in construction in many countries as a result. This is one of the themes. Really, it's about infrastructure that we're highly interested in globally.
How bad's China right now?
It's not looking great.
That Mercedes news yesterday really got to me.
Yeah, it's the Chinese economic model is struggling. It's very, very difficult to do what the Chinese government is trying to do, which is switch from capital intensivity and more towards a consumer-driven economy. It takes time, and the idea that that could happen without any sort of ebbs and flows is unlikely, and we're seeing one of those ebbs at the moment. It's one of the reasons why when we think about inflation risk, especially for countries like Europe, or regions rather like Europe, it's difficult to see where that real reacceleration comes from when you have a disinflationary or even deflationary pressure from one of your, if not your biggest buyer.
All right, Lauren, thank you so much for joining us. Really appreciate it. Lauren Goodwin, Chief Markets Strategist and Economist at New York Life. They're down in Madison Square Park, where I used to work down there.
So pretty.
It's my first Shake Shack I ever went to was Madison Square Park.
Aw, it all comes full circle.
It all
for
comes
you.
full circle.
Yeah.
I mean, yeah.
Well, Lauren lives near me in Brooklyn-ish,
Oh,
so you know.
another cool kid.
Yeah, so she's
Okay.
definitely one of the cool kids. And you still play Catan, right? Oh, okay, great.
What
Thanks.
is Catan?
Ooh. I can't with these people, Lauren. I can't. They don't know what an Eames-chair is. They don't know what Catan is. It's the best board game
I don't do board games.
ever.
Really?
Yeah, and if you're a Catan player, you're a Catan player.
You know it. Okay.
It also might ruin your relationship, so don't necessarily play it with your partner.
Okay, very good. All right, Lauren, thank you so much for joining us. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. Hezbollah pounded northern Israel 140 rockets today. It comes a day after the military group vowed to retaliate against Israel for a mass bombing attack. Israel's military said the rockets came in 3 waves targeting sites along the ravaged border with Lebanon. The Senate is expected to act if the House does not send over a government funding bill soon. Bloomberg's Amy Morris reports.
Senate Majority Leader Chuck Schumer is teeing off the process to move the chamber's own stopgap funding plan.
House Republicans don't seem to have any plan for actually keeping the government open, so the Senate will step in.
The House failed to pass Speaker Mike Johnson's 6-month funding bill tied to a measure requiring proof of citizenship to vote. A Senate version won't include those funding provisions and is likely to extend funding into December. Republican senators have mostly supported Johnson's efforts, but have left the door open to taking the reins if the House continues to stumble as that September 30th funding deadline draws near. In Washington, Amy Morris, Bloomberg Radio.
A Kentucky judge was shot and killed in his chambers, and the suspected shooter is a sheriff. State police say 43-year-old Sheriff Sean Steins of rural Lecter County shot District Judge Kevin Mullins after an argument inside the county courthouse. Mullins, who was 54, was pronounced dead at the scene. State Police Trooper Matt Gayhart.
Anytime a situation like this takes place, especially in a small town, it shakes the very foundation of what the town is, and this is no different. We're just hoping that it's a bad situation, that we can resolve it as quickly as possible and start that process forward.
Trooper Gayhart says Sheriff Stein surrendered without incident and is charged with first-degree murder. The North Carolina Republican Party is calling the allegations against their candidate for governor a political smear. CNN reports Mark Robinson made inflammatory comments about slavery and other topics on the message board of a porn website years ago, which he denies. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Paul, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. Bloomberg Surveillance this morning brought to you by Interactive Brokers. Portfolio analysts consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free PA. All right, you got 47 seconds. What is Catan?
Okay, first of all, it's Catan.
Catan, thank you.
Catan. It is a game where you trade resources to build houses and cities.
Okay.
And then if you get to 10 points, you win these things, and you have to get resources to build roads and to build houses and other stuff. And
wow.
Okay.
It's really competitive, and you can trade with each other.
So
resources.
like Monopoly?
It's
No?
not at all
No,
like
no.
Michael Barr feels me, okay? It's not at all like Monopoly. It is cutthroat.
All right, but this is big for you.
This is really big for
And
me.
it's big for Lauren. I mean, and she's
it's
Lauren
big for
Goodwin's a
me.
great guest, so she can come back anytime. We'll talk Catan with her. All right, we're going to have more
Catan.
coming up. S&P 500 unchanged. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in futures after big moves in Thursday trading. Right now, NASDAQ futures, little change, down about 17 points. Dow futures, little change, up about 20 points. And we have S&P futures down about 0.1%, down 5 points. The two-year yield at 3.60%. That's up 2 basis points. The yield on the 10-year, 3.72%, and that's up 1 basis point. Quick check of commodities. We have spot gold higher, $2,617 an ounce. Brent crude, $74 a barrel. WTI crude, $71 a barrel. Companies making news. Johnson & Johnson. Sources say the company, they lifted baby powder settlement offer to more than $8.2 billion from $6.5 billion. J&J shares down about 0.7%. And we've been talking about it. Constellation Energy investing $1.6 billion to get its 3 Mile Island nuclear plant in Pennsylvania back in service by 2028. They're agreeing to sell all the output to Microsoft for data centers to power AI. And here's a new housing trend. More boomers, Paul, turning to wellness-focused residences instead of traditional senior communities, okay?
Okay.
The Wall Street Journal says fewer bingo nights, and they want more exercise, meditations. Comes at a cost, so residents are going to range from about $4 million to $12 million. Wow. That is your Bloomberg Business Flash. Back to you.
Yeah, I'm a boomer by like 13 months, I think.
That's it.
December 63. I just kind of catch in on the bottom. But my parents, they were raised in the Depression, went to served in World War II and did all that kind of stuff. And I kind of think of my older siblings as boomers. I'm somewhere kind of in the middle. Between. All right, let's talk about these markets here. All right, when I started on Wall Street in 1986 on the block trading desk at Payne Weber, my boss John Coughlin would come up and just smack me on the head every day at 8:29 and said, "Don't lose money." And the other thing was, don't fight the Fed. Well, I've got the Fed working for me here. I don't know. I feel like that's kind of constructive for the markets. I wonder what it's going to mean for some of the professionals out there. Let's check in with one of them, Stephanie Lang, Principal and CIO of Hamrick Berg. Now, they're based down in Atlanta. So here's my theory about Atlanta, Lisa. Every single street in the entire metropolis of Atlanta is Peachtree.
Is that right?
It's Peachtree Street, it's Peachtree Avenue, it's Peachtree Place, it's North Peachtree, South Peachtree, Northeast Peachtree. Sure enough, Stephanie, at Hamrick Berg, where are they located? 3060 Peachtree Road, Northwest. So before GPS, I was lost every single time I went down there. I'd have my little map. I'd go to see my client, and I was invariably in the wrong place. And it's not like you're a block away from where you're supposed to be. You're on the complete other side of town from where you're supposed to be. I don't get this whole Atlanta thing, but maybe Stephanie can figure it out. Stephanie, you're a professional here. Assuming you can find where your office is amongst all the Peachtree streets and roads down there in Atlanta, what did you make of this Fed cutting interest rates 50 basis points? That was a pretty big move, wasn't it?
It was a big move, and kudos to the Fed for pulling it off and having the market reaction that it did. It really took us by surprise. I thought that they would go 25, didn't want to spook the markets, but between Powell's, messaging to the market, he somehow convinced the market that he's not behind the 8 ball, which is pretty amazing considering that the statement of economic projections clearly show that there's, some downside risk to growth based on all the projections they gave there.
So what does it mean for you as you think about kind of putting money to work on behalf of your clients here? Does it change your risk outlook? Does it change maybe some of the things you might look at, or is it just steady as she goes?
Well, I think we have to recognize that there is a trend going on in terms of the employment data. So it's something that we're definitely keeping our eyes on. We're definitely data dependent. So, on one hand, you see the unemployment picture weakening, still at, incredibly low unemployment rates. But you look at job openings that have ticked down 1 million jobs this year, and then unemployed persons have ticked up. So things are not really going in the right direction per se, but, still pretty steady in terms of the economic data. So encouraged that we're seeing some good data points. I mean, I think that's why the market has held up so well, because good news is good news and bad news is bad news. We need that good economic data, so we're not concerned that we're going into a recession. So, we got retail sales, you got good jobless claims, and so we're keeping our eyes on the data to make sure there's not that deterioration that's indicating a recession, which could be bad, for the stock market.
What kind of sectors do you like that have nothing to do with kind of the economic cycle, but are more structural in nature?
Yeah, I mean, if you look at what's been going on, it's all been about, big tech and how they've been driving earnings growth in the stock market. But we're at a pretty interesting point in the cycle because you now have a rate cutting cycle start. You've had the yield curve uninvert. And you start to look at what sectors are well positioned in those type of environments. And so they tend to be more the defensive sectors. And you look at something like healthcare that, is well poised in this type of environment. They've had less participation in terms of earnings. You look at just the beginning of this year, had earnings declines, but ending the year with big growth. So we like that it's cheaper than the market, but growing faster. And then you look at kind of the weight loss drugs, there's that secular tailwind there. So we like to look at areas that there's been a little less participation, and healthcare is one of them. And so I think that's what we have to keep in mind is kind of the rotation going on and what hasn't necessarily participated, but now the fundamentals are supporting it.
Talk about breadth in this market, Stephanie. We, for the longest time, we had these magnificent 6, 7, 8 stocks really dominating the market. It seems like the breadth of the market's been getting a little bit better. How do you guys think about that?
Yeah, I mean, it's very encouraging. So, there's some, overall economic data we're worried about, but if you look at the earnings picture, 2023 was all about the Mag 7, not only from the stock market, but the earnings growth. And now you're starting to see that broadening, which is really healthy for the market. And what's pretty telltale is this year, you're seeing only 3 out of the 7 Magnificent 7 outperform the market. So last year, every single Magnificent 7 not only outperformed the market, but was double the price gains that you saw on the S&P 500. So this year, only 3 stocks out of the 7 are outperforming, yet the S&P is at all-time highs. So that's really encouraging. But even more so to see that earnings growth, because really we were so dependent on the Magnificent 7. They're such a big part of the market. But you see areas like I just mentioned earlier, healthcare, that in the first quarter of this year, it had, earnings declines of more than 20%, but ending the year with earnings gains of more than 20%. So you need to see that fundamentals improvement, that participation outside of the Magnificent 7 if we want to keep this rally going, because the earnings growth in the Mag 7 has been just that magnificent, but really going forward, you got to see the rest of the market kind of take up the slack.
All right, Stephanie, thanks a lot. We appreciate it. Stephanie Lang, CIO at Hormrick Berg, joining us. So now I know why you're going to Ireland next week. Because you're missing UNGA and the complete commuter nightmare.
Is that right?
That will happen. It is the second most read story on the Bloomberg terminal. Kicks off September 22nd. And you're looking at jam-packed streets and skepticism about the reliability of mass transit trains and buses.
Oh, boy. And John Tucker, he's already hates 3rd Avenue here, which is basically taken over by UPS and FedEx. They park their trucks 3-4 wide across the street and delivering goods all over the place. Now you bring the United Nations to the east side of Manhattan. That's just lovely.
New York has declared gridlock alert days for all of next week. So this is why the guy goes to Ireland.
Yes, exactly.
I actually used to take that week off on purpose.
Yes.
You did? In New York,
Get
yes,
out.
for so long. And I used to have to try to find parking. It was ridiculous. And I worked by the UN.
But we love our international friends.
We do. We love them.
To New
Yes,
York.
absolutely.
Spend your money, but I mean,
But he's going to Ireland for that.
Yes. Huey Lewis, Lawrenceville, class of 67.
Damn if you do, damn if you don't. I'm supposed to get a raise next week, you know that when I won't. Working for a living, working for a living, working for a living, living and working. I'm taking what they're giving, cause I'm working for a living.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Wendy Schiller, professor at Brown University, get the latest on these elections. David Weston joining us in studio. How cool is that, rebranding Wall Street Week? I tell you, Wall Street Week, one of the best radio, TV brands on global Wall Street for decades, and we've got it here on Bloomberg. Paige Henderson, senior portfolio manager at Allspring, talks about how she's managing her portfolio off the Fed news this week. So we got a lot coming up in this 9 o'clock hour. The Fed, looking at the kind of the futures, kind of mixed here. Not much going on here, but we're going to make some noise and news as well. Let's go to Lisa Mateo right now and get a Bloomberg Business Flash. Lisa, what are you looking at?
You got it. Well, that high from the Fed's 50-point rate cut this week, it looks to be fading. Some bad news on the earnings front may be to blame for that. You had FedEx, economic bellwether, missed profit estimates, warned that its business would slow down. Shares now down nearly 13%. Then you look at shares of rival UPS. They're down more than 2%. Let's take a look at futures. NASDAQ futures down 0.1%, 32 points. Dow futures, little change, up about 17. S&P futures down 0.1%, or 8 points. The 2-year yield, 3.59%, up 1 basis point. The yield on the 10-year, 3.73%, and that's up 1 basis point. To currencies, we have the dollar stronger. Japanese yen down 0.6% at 143.60 against the dollar, with the euro, British pound stronger. And that's after the UK retail sales for August. It beat estimates. We'll head over to shares of Nike, up 8%, brought back Elliott Hill to replace John Donahoe as CEO. And then we check in with shares of its rivals. Adidas down more than 2% in Germany. Puma down more than 4% in Germany. And finally, yes, today is the day Apple's new iPhone 16 lineups hit stores, almost 60 countries without the AI software. That's your Bloomberg Business Flash. Paul and Alex.
And we've established that Paul's going to get his in about a week because he's going to Ireland. Lisa's not upgrading. I'm not upgrading. Although I kind of want the pink one. I know it's aggressive pink. I get that, but part of me kind of.
I was considering the teal one.
I know you can say consider, but it was like literally 0.3 seconds. Yes. You considered that. Yep. Okay, I've been told it's 46 days until the U.S. presidential election. Bloomberg Television Emery Hordern will be live in North Carolina. She's speaking to the governor later on today at 3:30. So don't miss that interview. But it's a good time to check in with Wendy Schiller. She is a Brown University professor. And she joins us now. She covers political science, international and public affairs, etc. Hey, Wendy, we had this really interesting town hall with Vice President Kamala Harris, along with Oprah and all other Hollywood A-listers. Is that the tact that her campaign is going to take versus like a formal sit-down, meet the press kind of interview?
Well, I mean, I think the Harris campaign in that particular instance recognizes the vital importance of the Black vote to the success of that campaign. We saw that it underperformed for Hillary Clinton, got out a little bit better for Joe Biden, but still didn't, has not reached the Obama turnout levels. And, if you want to win North Carolina, which looks much tighter than it did even for Biden and Trump in 2020, you're going to need, a really good portion of those million Black voters to get out the door. So I don't know if the format was really the most important thing about that interview, as much as really appealing to a core constituency in this election for the Democratic Party.
Wendy, for the, I guess, the middle-of-the-road investors that each campaign is trying to get to their side, is there an issue or two that is the most important, do you think?
Well, it's interesting, Paul, that you say investor, right? We can think about all. No, I mean, it's not a slip up. It's actually, that's how we think about politics. Voters think I am giving my commodity, my vote, to a candidate, and I'm investing in what I think they're going to do for the next 4 years. And to the point about interviewing, the problem for Harris among independent voters or, educated investors is that she hasn't given quite enough detail about what she'll do. She's getting a little bit better. And that's where, some of these smaller but high profile interviews would help her define her message on taxes, on the economy, even gun control, which, she's been emphasizing a little bit more that she's a gun owner and that she would use her gun in certain circumstances. This strategy of avoiding that can also lose her the opportunity to really shape her, her policy, what she's selling to voters who want to invest in her.
So then the 50 basis point cut from the Fed and sort of the trajectory as we go here, who does that help/hurt?
It certainly, we expect, it takes a little while for credit card rates to adjust, and they're pretty high when you carry a balance. But of course, if you have a high balance and that cuts, that's going to save you some money, either in your minimum payment or, how you're trying to catch up and really pay down that debt. So voters will see that, but will they see it in time? We're getting, as you said, very close to Election Day. Early voting starts in a lot of states just in a couple of weeks. It's already started in a couple of states now. So that's the problem for the, sort of the economic outlook, which looks really pretty good with inflation and unemployment right now, is that the window is closing for people to feel the sort of upswing in the economy before they cast their vote.
Wendy, we're going to have a vice presidential debate coming up. Should people pay attention to that?
It's an interesting thing with this debate because you've got Tim Walz and you've got J.D. Vance, and now Trump's age is still an issue with some voters. He's 78, and he's always projected more energy than Biden did. But you still have to consider the possibility that he may not serve out his entire term, and that means J.D. Vance will be president of the United States. So I think the Democrats want to really emphasize that isn't just VP. It's that this guy could be president of the United States sooner than you think. Do you really want that? And that's, I think, going to be the aim of the Walz team, to really push that that theme that J.D. Vance could become president. And, is that a Sarah Palin effect from 2008? Is he ready, and would he be good?
I wonder how much we're going to hear about cats and dogs. I'm actually not entirely kidding on that. And also, but in all seriousness, like Trump said he wants to go to Springfield. Like, how much of this really, is this an actual important issue in the way that swing voters need to be looking at these candidates?
Well, the Trump campaign, I have to say, seems to be a little bit zigzaggy this past week. And, thinking, oh, maybe I do want to reinstate state and local tax deductions, which, you can argue Trump, punitively put in the tax bill to punish states like Illinois and California and New York because they didn't vote for him. So it's just, and now he's like, wants to go to Springfield. You're not going to win Illinois. You should be in Pennsylvania and North Carolina and Arizona and Nevada and Wisconsin, not Illinois. So I don't know what's going on with the Trump campaign thinking, but, these are not the states he needs to be in, and he doesn't have to get involved in this. His rhetoric can be inflammatory, and the one thing independents, did when they didn't vote for him in 2020 was get turned off by his rhetoric. So I think it's the exact wrong thing to do for the Trump campaign, not that they'll necessarily listen to me.
All right, Wendy, thank you so much. We appreciate it. As always, Wendy Schiller, professor at Brown University. I tell you, well, growing up on Global Wall Street, one of the iconic shows was Wall Street Week. And as a research analyst on Wall Street for 20 years, I always wanted to get invited to Wall Street Week by Louis Rukeyser. Never happened.
I'm sorry.
Never happened. My boss went down there, was invited, and we were there. We were talking railroads and trucks. It was around the Consolidated Railroad Conrail IPO in 1986. How big was that? And we were the axe on that one. We've got Wall Street Week here. That brand is now on Bloomberg. David Weston joins us. He's the host of Bloomberg's Wall Street Week. He joins us here in our studio. David, you guys are kind of rebranding and relaunching Wall Street Week. Again, that is for a lot of folks on Global Wall Street. That's an iconic name. What are you guys doing with it?
As you say, it's been iconic for over 50 years, Paul, and I'm sorry to say it's too late for me to get Louis Rookheiser to ask you on the program, but I know a guy that could probably help you on the new version of it. But we are redoing it because the world has changed. The financial world has changed, the economy has changed, and goodness knows media has changed a lot in the 50 years since Wall Street Week was created. And obviously we have a lot more outlets, a lot more to think about every single week. So what we're doing is we're still covering business, economy, the central subjects that Bloomberg covers every day, but we're doing it through stories rather than simply through interviews. We'll be interviewing people, but we'll putting those together in specific stories that we think people will be interested in, that they can actually think about over time rather than just respond to in the moment. That's the essence of the change.
So what's so interesting, too, is sort of the way you're thinking about distribution, right? It's not just going to be, hey, check out your program on Friday night, which everybody should. But also there's going to be a lot more ways and innovative ways for us to watch the content.
Which is where all media is going. But also, in fairness, we've gotten dragged there a little bit because increasingly we would hear from our viewers, our listeners, who'd say, you know what, I love your program on Saturday. I love your program on Sunday. I watch it on YouTube. I watch it on Bloomberg on the weekends when I'm at the gym. They're not waiting around till 6 p.m. But that's the way all media has gone. There's no such thing as must-see TV. Paul knows it so well. It's not the days of NBC at 8 p.m. Anymore. It's a very different environment.
So what's a prototypical guest, do you think, going forward for Wall Street Week?
Or story.
Yeah, or
to that
story.
point.
Well,
Exactly.
so I'll give you an example this week. For example, we go to Detroit to tell the story of Detroit and the auto industry and Ford. So we have Jim Farley, the CEO of Ford. We have the mayor, Duggan, as well. We have Haley Stevens. Interestingly, she's the representative from Northwest Detroit. She's where that town hall was had with Oprah Winfrey last night.
Oh, interesting.
And she knows the auto industry. She was on Obama's task force to save the auto industry. She knows it really, really well. We talked to her about the move to EVs and what that does to employment in the UAW in that new world. So that's a cluster of guests to tell that story in a more nuanced way and a longer form.
So what else are you excited about? Like what other topics? Because ideas are easy and execution is hard, right? Like what are some of the ideas that you guys are kicking around?
So right. I mean, it's not that hard to find a topic.
Yeah.
But the question always is, okay, what's the story about that? So I'll give you another example this week. Restaurants. We do the business of restaurants in New York. And we have Danny Meyer on, and we have Daniel Boulud on, and his CEO of his company, as well as a woman named Melba Wilson, who has her own restaurant called Melba's up in Harlem. And we tell the business of restaurants, but really what makes a restaurant work and what makes it last? I mean, Danny Meyer started Union Square Cafe when he was 27 years old. Wow. Yeah, it's amazing. But so what makes a business of a restaurant really last over the long term? So those are the sorts of stories we're trying to get at.
And having worked in a restaurant for 9 years at some point, like it is a hard business. Like you gotta love it to do it.
Really? Oh yeah, I have to.
There's no other way you'd be in.
So I'm curious. We should have interviewed you because one of the things we got at Danny Meyer and Daniel Boulud is it's critical that the people who do it, because it is so hard, actually like each other. To come together and they work as a team.
Totally.
That team's got to work, and if it doesn't, then the restaurant won't work.
Absolutely. That is such a one of the first restaurants I worked at was like a small family-owned French restaurant, and that was very much key. Like you needed it, and everyone knew each other for years. Like the daughter came up and ran the restaurant. Like it was that kind of vibe, and you kind of need that. I've also worked in restaurants where that's not the case, and when conflict comes, it's not pretty.
Well, everything I know about the restaurant business, I learned from the TV show The Bear.
Yeah, exactly.
Oh, okay,
yes,
sure.
Exactly. David, you've been everywhere. You've done everything in your career. But for me, the most important thing.
He's like, hey now.
For me, the most important thing is you were president of ABC News for a long time. The media business today, David, I mean, some of the companies that you and I grew up with, a lot of our listeners and viewers grew up with, they're trying to figure out how to navigate in this new world. How do you think it plays out?
You know it so well, Paul. And I've said if you sentenced me to go back to run a media company today, I have no idea what I would do because it just doesn't work anymore. And I have to say, I fear, because I'm not sure this will be good, I fear it's all going to essentially the hyperscalers. It's going to be Amazon. It's going to be Meta because they can have huge distribution globally with billions of potential viewers or listeners, and they have all the data to know what people want to see. So I think it's going to be very hard for the more traditional media companies, even the large ones like my old shop, Disney.
Yep, and Dave was president of ABC News 1997
1970, wow.
1997 to 2010. I'm not going to age him that much.
Me and Louis Rukeyser, we were together.
David, he is the pride of the University of Michigan. He goes undergrad, University of Michigan. He goes JD. It's just crazy. All right, we got the next generation of Wall Street Week. Stories of Capitalism, Friday, 6 p.m. Eastern Time. It's more than what you need to know. It's what you need to think about. That's kind of how they're pursuing it there. So we appreciate David getting a couple minutes of his time. S&P 500 off just 14 basis points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. This is after the S&P 500 notched its 39th record in 2024. Right now, NASDAQ futures down 0.3%, 61 points. Dow futures down 0.1%, 56 points. And we have S&P futures down 0.3%, 17 points. The two-year yield, 3.61%, up 2 basis points. The yield on the 10-year, 3.74%, and that's up about 2 basis points. To commodities, we have spot gold higher, $2,610 an ounce. We have Brent crude lower, $74 a barrel. WTI crude, $71 a barrel. Shares of home builder Lennar down more than 4% after missing expectations for orders. Companies making news, that's Apollo Global Management. It secured $5 billion from BNP to expand in private credit. You have Macy's. They're planning to hire more than 31,500 seasonal positions. It's at Macy's, Bloomingdale's, Bluemercury stores. Meanwhile, on the flip side, Warner Music, they plan to get rid of 750 jobs, 13% of its workforce, after adjusting its restructuring plan. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on on YouTube as well, so you can get us there. All right, as a graduate of the Fuqua School of Business at Duke University, I have a very strong anti-North Carolina policy here.
Okay.
But I make an exception for our next guest because she's really, really good, despite the fact that she got her undergraduate degree and her MBA degree at the University of North Carolina, Chapel Hill. I do make an exception for Paige Henderson, Senior Portfolio Manager at Allspring Global Investments, joins us. Hey, Paige, what did you make of this rate cut here, earlier this week? Boy, the market, looking at yesterday's movement, really liked it. What did you guys make of it?
The rate cut, I think, made some people happy and some people unhappy, but it wasn't a surprise. A surprise would have been 0 or 75. And it just confirmed our expectation that the economy is going to continue to move along in a positive way, and that we're more in a mid-cycle situation than moving towards a recession. And I think Powell supported that with his comments, which is why the market moved up more yesterday than right after the announcement.
What do you buy in a mid-cycle when the Fed's cutting in a okay economy?
Well, there's a lot of different things going on globally, and with our strategies, we have the global perspective. So we're looking for things that have maybe sold off a little, and there's actually been some weakness in some of the technology names that we like, so the semiconductors and different countries, for example. Another place that we're looking to add, or in the luxury consumer goods, because many of them have pretty high exposure to China. So those names have sold off a good bit as well.
How important are dividends and dividend yield to you, Paige?
Well, the name of our two flagship strategies is the international dividend payers and the global dividend payers. So dividend is the most important thing for us. I think right here, as investors are looking to move away from the money markets, because the 5% yields are going to be going away as short rates come in. As people look to reposition, they can move into international exposure, where most people are underinvested, get nearly double the dividend yield to support their income needs, and also you get a better price for their growth. So international stocks are trading about 50% lower on a PE ratio than the U.S. market, and so you get the global powerhouse companies that compete with the same companies that you own in the U.S. side of your portfolio at a lower price and a higher dividend yield. So you kind of get the best of both worlds. You get the income, and you also get your inflation protection.
Where do you need to stay away from? Like, what in this environment you're like, not with a 10-foot pole?
Well, the things that not with a 10-foot pole for us would be companies that are not strong competitors, that need a lot of capital. That could either be on the growth side or on the value side. Also, very, very cyclical companies. You can make good money sometimes by buying a company that's sort of broken and needs a specific market environment to succeed. That's kind of like winning the lottery. And that's the opposite of how we invest. We try to buy companies that are always going to be an all-weather winner. In fact, many of our companies do better when the market is weak. I don't mean just the market, but the whole economy is weak. And as we're all sort of getting used to this, what is really a normal environment, zero interest rates that we experienced for almost a decade is not normal. Companies have to get used to actually having to pay more for their capital. And that's where the weak players may have problems in a difficult environment.
Paige, as a dividend-focused investor, if Tim Cook were to come into your offices today,
oh boy,
what kind of conversation would you have with him? I mean, he's got $150 billion of cash on his balance sheet. He's going to throw off $100 billion of cash every year. Yet his dividend yield is less than 1%. What kind of conversation would you have with him?
Well, I would say as a dividend investor, I would love for you to share that cash with me.
You just set her up for that. You basically
did.
He has been asking Tim Cook to do this for like ever, by the way. But go ahead.
Yes. Well, so, in our strategies, our global strategy, we have a dividend at purchase. We have a minimum dividend yield requirement, but we bought Microsoft back in 2012 and have enjoyed owning that through all this time period. And they grow their dividend at 10%. They're one of our great dividend growers.
Really?
The problem for a company is even, if you're paying out a good amount of your cash flow, but your multiple's very high because the market expects great things from you, you're not going to have a high dividend yield. So, I can't really rough Tim Cook up too much because he's got a great multiple.
Okay, so this means you apologize to Tim Cook next time you see him?
No,
okay.
2 weeks, 3 weeks actually, I'm going to be right back at him.
Okay, fair enough. So, Paige, when we sort of look, how does the election, if at all, affect how you think about the market? Or do you feel like you're relatively insulated, even though some policies feel binary?
I think what happens, we experienced this recently with the election in France. Mm-hmm. So who wins the election is less important than the policies that they implement. And so it's more complicated than who wins and who loses. It's going to be matter more of, do we continue to have divided government? The thing that worries me from a generational perspective is the levels of our deficits. And that's where it can sort of play in with our investment perspective, because if we get a lot more inflation than the rest of the world, then we start to lose some relative value. And that's actually why an investor might want to increase their exposure to international, because you do get some of the hedge against the weakening dollar. But we're more of an all-weather strategy, like I said, and we try to own companies. They may be domiciled outside the U.S., but they still have a lot of exposure to the U.S. So it all kind of flows. You let the companies go to where the strength of the economies are, and you kind of have confidence that these companies know where to shift if things are changing. So, for example, Louis Vuitton does a lot of business in China. Maybe they do less in China in the next few decades, but that will work itself out.
Paige, talk to us about SAP. That's one of the names on your list. Why do you guys like SAP?
SAP is the second largest technology name in IFA. You probably use their software in your daily work. We use Concur for our expenses. They do a lot with supply chain management. Software is much like with Microsoft. People are familiar with how software is becoming more a reliable income stream due to the subscription and the cloud. So you are able to distribute, you get paid every year because you have to keep paying for it, whereas 20 years ago you bought your software and you kept it until you upgrade it. So these companies are becoming beautiful revenue streams, but they are very important to companies as they continue to ratchet down their costs. So SAP is, an intrinsic element that will allow companies to move forward into the new generation. And I always look back in history and you think about, if you could win on the gold rush, you should have bought Levi Strauss and not gold. Yep. And that's exactly what these companies do.
All right, Paige, thank you so much for joining us. Really appreciate it. Paige Henderson, she's a senior portfolio manager at Allspring Global Investments, the pride of the University of North Carolina, Chapel Hill. Word is they're trying to field a basketball team for this season. We'll see how they do here against my Dukies. S&P 500 futures looking down just a little bit, down about 0.3% on the S&P. The Nasdaq's off about 0.3%. 10-year Treasury yielding 3.73%. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Booker Studio, I'm Lisa Mateo alongside Paul Sweeney and Alix Steel with your opening bell report. So how are the markets going to kick things off on a Friday? That's the question. So far this morning, it seemed like that high around the Fed's 50 basis point cut this week is starting to fade a little bit. FedEx's profit miss, well, that didn't help. We'll get to those shares in just a bit. Right now, let's get to the markets as we get things off and running. We'll start with the S&P 500. Well, right now, down about 0.1%, 9 points, 5,703. The Dow down 0.1%, 55 points at 41,970. And we have the NASDAQ, little change, down about 11 points at 18,002. We have the two-year yield, 3.62%. That's up 4 basis points. The yield on the 10-year, 3.74%, and that's up 3 basis points. We'll turn it over to commodities. Spot gold higher, $2,609 an ounce. We have Brent crude lower, $74 a barrel. WTI crude, $71 a barrel. Looking at currencies, the dollar stronger, Japanese yen weaker, euro weaker, British pound stronger. We have Bitcoin, little change right now at about 63,000. At the open, yes, let's check in with FedEx. Right now down 13%. That is your Bloomberg opening bell report. Paul and Alix.
All right, thanks so much, Lisa Mateo. I'm waiting for the volume to kind of kick in here to see what kind of volume we're going to see, because this is when you get funds in there that can actually start selling or buying based on where positioning is. So that's kind of going to be fun to suss that out. Remember, options expiration, index rebalancing. This is all going to add to the flow, particularly within the tech market today. So watching those things. Melissa Otto is head of TMT Research over Visible Alpha, and she joins us now. Melissa, I know it's like a moment of question, but with the index rebalancing and then you get the options expiration, like how seriously am I taking the moves in tech, say, over 48 hours?
Happy Friday.
Happy Friday.
It's been an exciting week with the Fed. 50 basis points is significant. It will be interesting to see what the path is and how the market starts to think about rate cuts into the rest of this year and into next year. Ultimately, I think it's going to be very interesting to see what happens in the FX markets and how our non-U.S. investors start to think about potentially taking profits in some of these mega cap tech stocks that have done very well this year and really in the past 12 months.
So, Melissa, I think we've all kind of, seems like grown up over the last decade plus with technology really being the market leader, as goes tech, as goes the market. Is that still the case from your perspective?
It's something we're watching very closely because we have been in a macro environment that has been very supportive of growth. And there is a question is, what about the rest of the economy, the rest of the industries and sectors out there? How do we, support and get the fundamentals of those companies going in a way that excites the investment community? And that is an open question. It's hard to resist the fundamentals of these mega cap tech stocks. I mean, some of them are generating margins north of 50% and growing at double digits. Those are fantastic numbers.
What about like mid cap, small cap tech stocks?
Yes, so that's an interesting area. As interest rates come down, there may be some rotation out of large cap, mega cap into smaller mid cap names. We have seen some evidence of that in the Visible Alpha AI monitor. Since July, we've seen an uptick in performance in the smaller and mid cap stocks in our monitor.
So I'm pre-ordered my iPhone 16, Melissa. How important is any new product launch for Apple these days? It just seems like it's not the needle mover it used to be.
Yeah, I think you're right about that. The September 9th event, I have to admit, it was a bit underwhelming. And we've certainly seen that reflected in the consensus data, where iPhone units for Q4 and for next year have ticked down. For next year, actually, they've ticked down by almost 10%. So that indicates that overall sentiment is, being a little bit more conservative around that outlook for the iPhone.
Yeah, and you saw, though, Paul, that you had that report from an analyst over in Asia that said that its channel checks, and Apple got hit pretty hard as well as its suppliers. So it's like, I guess it still winds up mattering if we're looking at a super cycle on that end. The other thing that's interesting right now in the market that I haven't talked about with as much clarity as I'd like to is the dollar. And it feels like the direction of travel is just a weaker dollar as the Fed winds up cutting rates. What does that mean for mega tech multinational companies?
Yeah, I mean, the mega cap tech names are pretty significantly held overseas. And it's been a fantastic investment because not only have non-US investors benefited from a strengthening dollar since early 2023, they've also benefited from the extraordinary growth coming from AI and the cloud. So I think, they may be looking at their portfolios and saying, okay, we've had a fantastic 24 months. Maybe it's time to take a little bit off the table.
So, Melissa, in your coverage area here, what's your top call right here these days?
Yeah, we're really looking at the next 6 to 12 months and really trying to understand what companies are going to dominate the application of AI. So we've seen a lot of innovation in the model, in the chips, and what we really have not seen is the innovation in the application. And I think that's really going to be the next area where the market could get really excited. So we're watching that very closely. I mean, in theory, Apple should be front and center there, although it does seem like they're off to a bit of a slow start. Does Apple Intelligence serve as a catalyst for a replacement cycle and cause broad adoption, or is it a different player? So I think that's the area that I'm looking at very carefully to see, who that's going to be, what's going to be that catalyst, and what's ultimately going to get the market excited.
And what do you think?
We don't know yet.
Fair enough.
That's the $1 million question. There hasn't been any data or evidence suggesting it either way, but I think that's where the opportunity is. When we see that, then the opportunity's already been fairly well understood. When we don't know it, we're watching it. We're like, okay, this is where the monitor can be really valuable. Let's take a look and see what new names start to emerge over the next couple of months, and then I think we can get really excited.
Melissa, one of the things as it relates to AI that I'm trying to get my head around is how much of that spending on AI is incremental, or how much is maybe just switched from other parts of the tech stack, like, I don't know, information technology or something like that. How do you think about spending in AI in general?
Yeah, I mean, the CapEx has been absolutely incredible at the cloud service providers. I mean, they have just spent billions, and that ultimately is translated into great growth at companies like NVIDIA, for example, as they look to transform their data centers to accelerated computing, which is ultimately what lays the groundwork for generative AI. And I think companies themselves are really trying to figure out, okay, we want to be first. We want to make sure that we integrate generative AI into our enterprises, but it's kind of expensive. It's difficult. Our data's in a lot of different silos. It's going to take probably longer than we had originally anticipated. My guess is it's going to continue to, there's going to continue to be spend there.
So do you think that the real monetization then of AI is going to come from the consumer side, like Paul finally turning on his AI features when it finally comes out in his new black boring iPhone? Or is it going to come from more enterprise use and companies using it for efficiency? Where's going to be that big moneymaker?
Yeah, that's the question. I think because we haven't seen any real meaningful innovation at the application level. So, who is it, a chicken or the egg situation? Is it going to come from these enterprises that are spending so much and trying to figure it out from an internal consumer perspective? Or is it going to make them more productive, efficient in a way that helps support earnings and margins in these organizations? Or is it something like a broad adoption that comes from an installed base that already exists, something like a smartphone or an iPhone that is helping to propel that? It really isn't clear.
Melissa, thank you so much for joining us. Really appreciate getting your thoughts here. Melissa Otto, she's head of TMT. That's technology, media, and telecommunications, all that kind of stuff.
Thank you.
She's head of TMT Research, S&P Global Visible Alpha. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex, Lisa, Hezbollah pounded northern Israel with 140 rockets, a day after the militant group's leader promised retaliation for the wave of walkie-talkie and pager explosions in Lebanon this week. Bloomberg's Giovanni Bersecci has more from Dubai.
There was a lot of attention on Hassan Nasrallah's speech yesterday. This is the first time the Secretary General of Hezbollah had said anything in public since those series of explosions rocked the country both on Tuesday and Wednesday. The Lebanese Health Ministry now saying that those explosions have taken the lives of 37 people, injuring 2,800.
Bloomberg's Giovanni Bersecci. North Carolina Lieutenant Governor Mark Robinson, the Republican candidate for governor, has refused to leave the race. This after a CNN report attributing him to explosive remarks on a pornography website, including "I am a black Nazi" and another calling for the return of slavery. In response, Robinson posted a video on X saying the words are not his and the story is false.
Clarence Thomas famously once said he was the victim of a high-tech lynching. Well, it looks like Mark Robinson is too, by a man who refuses to stand on stage and debate me about the real issues that face you. Instead, they want to focus on salacious tabloid lies.
Robinson faced a midnight deadline to withdraw ahead of the distribution of ballots beginning today. Former President Trump says he's a greater friend of Israel than his presidential opponent.
Let's talk about Israel, or Israel, as they say.
Trump spoke at the Israeli-American Council's National Conference in Washington, D.C. last night. Vice President Kamala Harris participated in a live stream from Michigan with former talk show host Oprah Winfrey. Harris was asked about the transition from running mate to becoming the Democratic presidential nominee.
You know, we each have those moments in our lives where it's time to step up.
The event was dubbed Unite for America. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, Lisa.
Michael Barr, thank you so much. We appreciate it. Alice, I'm looking at this news story on Bloomberg. Boeing girds for long strike as gig economy gives workers clout. That's not what you want to see.
Long strike? Did they define what long strike is?
I don't know, but it just seems like striking employees receive their final Boeing paycheck on Thursday, and the company stops paying for their health insurance on September 30th. Both measures will pinch household finances, typically ratcheting up the pressure and stakes for union negotiators and contract talks to reach an agreement. But there's this gig economy out there where that wasn't the case in generations before. And if you want to go out and earn a few bucks, I guess you can go drive an Uber Eats, a Lyft, whatever, I guess.
And well, also there's been a lot of other unions that have had, whether you're looking at airlines, whether you're looking at autos, that have had some pretty hefty increases in terms of salary, in terms of suppliers also. So the precedence over the last couple of years is also on the side of the union workers. That stock right now is down by about 0.3%. Usually they've been saying a couple weeks.
Yeah.
It's been a week.
Yeah.
And a couple days.
Yes, it has. And I think just kind of reading George Ferguson's research from Bloomberg Intelligence, this is a cash burn concern situation for Boeing. They've got $10 billion of cash on the balance sheet, but they're burning through that. And George thinks that could be kind of done, in one quarter. So they got to get these planes out the door because you get paid when you deliver the planes, apparently. Not when you book the order years and years ago. You get paid when you deliver the planes. And if you don't have the workers there, that is a huge problem. And they've already had, obviously, numbers of issues with plane reliability and some of their work. So it just seems like a tough situation for both sides. But it looks like the workers here might have really a lot of the leverage.
You want to hear a fun stat right now, unrelated to Boeing, but for a second? Volume on its versus its 10-day average for the S&P is up 208%.
Whoa.
For the Nasdaq, it's up 111%.
Oh boy.
For the Dow Jones, 257%. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks, well, looks like it's taking a breather after a strong day in Thursday trading. That's following the Fed's half-point rate cut this week. The S&P 500, fresh off its 39th record high of 2024, now down 0.2%, 12 points at 5,700. We have the Dow down 0.2%, 86 points at 41,934. The Nasdaq down 0.1%, 17 points, 17,995. The two-year yield 3.62%, up 4 basis points. The yield on the 10-year 3.75%. That's up 3 basis points. Look at commodities. We have spot gold higher, $2,603 an ounce. We have Brent crude lower, $74 a barrel. WTI crude, $71 a barrel. Europe stock 600 down more than 1%. A big part of that, Mercedes-Benz Group cut its financial forecast for the year. Shares of Mercedes in Germany down more than 1.5%. And shares of home builder Lennar down more than 4.5%. Quarterly home orders fell short of expectations. So where are we seeing a lift? That would be Nike, up more than 7.5%. It announced a change in its CEO. That is a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo, for joining us there. And I'm still stuck on this volume thing.
Yeah, that is amazing. I mean, Dow Jones 243% of the trailing 30-day average. Just looking at it, crazy.
Oh, yeah. Just in case we were wondering if options expirations and rebalancing is a thing, today, together, it's a thing. What's also a thing is the Fed cutting 50 basis points this week. Now, if you're sitting in money market funds or if you're sitting in a high-yield savings account, you're a high-net-worth individual, what do you do with that now? Does it change how you need to reallocate? Ray Ann Mitrione is partner over at Callan Family Office, and she has a job just like this. She provides advice for ultra-high-net-worth clients with strategic long-term investment guidance. In that realm, Rayanne, what do you do now? Do you need to reallocate some of that money just sitting and chilling?
Yeah, I mean, we're in an interesting environment. I think having a rate cut this week was no surprise to anyone. Having it be 50 basis points was a surprise to some. I mean, we've been staying fairly fully invested, but there's no doubt that there's a lot of cash on the sidelines. We're seeing, there's $6 trillion in money market funds. And those yields are going to be coming down. So it's going to be a less attractive place to be. So we have been starting to see, some of those dollars flowing into the equity markets and elsewhere. But as rates come down, it definitely makes sense to get invested and find a new home for those dollars.
So, Rayanne, in your career, you've served ultra high net worth clients. What are those types of clients? What are their needs? How would you rank kind of their objectives here?
It's very much a long-term, multi-generational focus. So there's a lot of focus on our side around after tax, after fee, after inflation performance, and making sure that they have, the right entities set up for long-term transfer of wealth across generations. So it's a little bit different than what you may see for a traditional retail investor. I mean, we are building diversified allocations for the long term. We are using a good bit of private capital in those allocations because they can handle that illiquidity and those longer time frames as well.
So do your clients then, how do they look at the election and a potential capital gain increase in taxes, just in general corporate taxes, in general high income taxes? Like, are they already thinking and trying to figure out how to shift?
I think election and what those implications will be are top of mind for a lot of people right now. Unfortunately, it's hard to say what direction we are going to go. I mean, everyone is talking about, cutting taxes in some areas, but increasing in others, and capital gains are certainly a focus. But it's hard to make moves now when you don't really have the clarity. So we're staying close and having a lot of communication with clients around the possibilities that are out there right now, but unlikely to make any moves until we really know what the outcome is and what those policies may look like going forward.
Hey, Rayanne, for your typical client, how much do they want to have invested in alternative investments? How much do you guys recommend they think about alternatives? What's the strategy there?
It's very different client to client, but there is a good appetite for it. You do get an illiquidity premium typically over investing in traditional asset classes. So if you're in private equity over the long term, you should get a premium over traditional equity investments. And our view is having 20 to 30% of the portfolio in that area across private equity, private real estate, private debt, and other areas can make sense and can really boost your long-term returns if you can handle that illiquidity. So I'd say somewhere in the 20 to 25% range is pretty typical for a lot of our clients.
And how do you find the right ways to invest in that arena? Because I feel like everyone's trying to get the right product out there.
Absolutely. And it is really important to invest with the right firms because they're, if you look at, say, U.S. large cap, there's a pretty narrow range of returns between, a top quartile manager and a bottom quartile manager. But when you're looking in the private markets, there can be a really large difference. And so we spend a lot of time doing due diligence in that area and evaluating firms and track records and investing with those that we really believe are the best in their individual area.
Do your clients want to be simply in ETFs that maybe monitor or mimic the market, or do they want to take a little bit more of an active approach typically?
We do a balanced approach. So we do have a core passive allocation within our equity portfolios and then have concentrated satellite active managers around the edges. But for our passive allocation, we don't really use ETFs. We use a direct indexing strategy in the middle where we replicate the index with individual stocks, and that allows us to have a tax loss harvesting overlay over top, which helps us to manage our clients' tax liabilities, which, as I mentioned, is a big focus for us. So even in a market environment that's up, with a market up 20%, you still have stocks that are down. So if you're replicating index, you can harvest those losses, sell one stock, buy something similar, and really capture those losses to offset gains that our clients have elsewhere in the portfolio. But we do believe in a blend of passive and active in our portfolio construction.
Love me that tax loss harvesting. I totally get that. Okay, and then in terms of just medium-term outlook, are you guys positioning or talking to your clients positioning for like a soft landing, an economy that's okay, decelerating, or on an upswing?
Yeah, I mean, the economy remains strong, so we're positioned for that. I would not say we're in a defensive position, but we do believe in rebalancing. So we're pretty disciplined about trimming the winners, rebalancing into other areas, and we've seen that kind of play out well so far this year. I mean, we had such a narrow market environment, and now that that's broadening out to other areas, it's paying off to have that diversification. So we do believe we're in a soft landing scenario and that we're seeing some softness, but overall the economy remains strong and interest rates coming down now should continue to support that.
Rayanne, you're based down in West Palm Beach, is that right?
That's correct.
And are people still flooding down there? Is that still a thing?
It is. It's come down. It's not quite at the same rate as it was, but we've seen a huge influx of people moving down here, businesses moving down here. The environment has changed quite a bit over the last few years. I mean, really starting with COVID, but it's slowed down some, but we are still seeing an inflow.
All right, Rayanne, thanks a lot. Really appreciate it. Rayanne Mitrione, a partner at Callan Family Office, joining us there. So, are you packed? Are you ready?
All ready to go. It takes me
Who's
5
ready?
minutes to pack.
Ugh, hate those guys. So, just so you know, Paula's leaving for Ireland for the next week.
For the week. They're gonna love me over there.
They're gonna love him. Yeah. I'm gonna be for the 10 to 12 Bloomberg Intelligence all next week. I will hold down the fort while Paula's gone, but for now, I'm going.
Oh, you are?
I am going.
You're leaving. Okay.
You're gonna get Molly Smith.
Oh, Molly Smith.
And I'm gonna go do TV later in the afternoon.
Okay. Well, Molly Smith, when she comes in, we talk tennis.
Talk tennis.
We go deep dive into tennis because nobody. Oh, it's John Tucker. Oh my God.
No.
All right, Rich. I can't tell you what you just crushed my soul there. I was looking for 2 hours with the lovely Molly Smith talking tennis. Now I got John Tucker. So, all right, let me get this straight. Alex is leaving me, and Lisa's leaving me.
No, I'm staying.
You're staying.
She's
Okay.
staying.
I'm gonna go because
Okay.
I have TV in the afternoon. But you can learn how to fix a bathroom and do windows and tiling with John Tucker. That's
right.
cool. He knows what an Eames chair is.
All right, we'll talk Jersey Shore stuff that no one will know.
Business, not like home repair.
Exactly.
DIY, baby.
All right, so with that all coming up, so that's fun. And so listen or watch Alex this afternoon from 3 to 5 p.m. on Bloomberg television, closing up the market, doing all that kind of stuff. This is Bloomberg Good Morning.